Bank earnings in the spotlight. Deutsche Bank and UniCredit lift their revenue outlooks as higher rates boost trading for Barclays. It's a miss. Big tech battered Microsoft, Alphabet, and Texas Instruments tumble after hours as weak earnings hit some of the world's top companies. Plus, the new Prime Minister, Rishi Sunak, appoints his cabinet as the Times reports he may delay next week's fiscal statement. Now, let's take a look at the futures. This is a picture across the board. Now, stocks a little bit mixed when you look at the futures. Stocks were a little bit mixed in Asia, and so that's filtering through the open here in Europe. The European stocks 50 futures down 0.3%. The FTSE stabilizing somewhat, but of course we need to look at the individual stocks that are also reporting. Equities were up in China, Japan, and South Korea. Bit of optimism, as our Mark Cudmore was saying, it does seem to be risk on across the board. Whether that holds is $1 million question. We do have a couple of data points, and then the big one tomorrow, Thursday, is of course the ECB. Here in the UK, the focus will be on whether we have that financial statement on October 31st. That's Monday. Remember, the timeline is quite tight because then we have November 3rd with the Bank of England. All right, the FTSE just opening pretty much flat. The other thing we need to look at is, of course, the foreign exchange market. There was a great story on the Bloomberg terminal about how many traders, now that they think there are more experienced people in charge at number 10, are looking to buy, for example, some of the distressed UK debt. British pound 114.81. The IBEX just opening 0.4% higher. And I'm looking at commodities. And the story, of course, with Russia. The story also one of Italy, as they say they will try and do as much as they can to get more oil, including reopening some of the fields. The Italian 2-year yield 2.74. Now, this is what we need to look at every day. The U.S. 10-year yield yesterday. We're bringing you a chart also looking at the 20-year yield, 40483. S&P futures down 0.8%, but overall there was a broader risk-on mood over in Asia, and then Brent crude at 92.80. Now, to get smarter for your working day, let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, you're looking at the cost of servicing U.S. debt. Good morning.
Yes, good morning, Fran. I hope I can do this a little bit smarter than earlier. I did a bad job of it earlier. But anyway, this chart is the estimated annualized cost of servicing the U.S. debt, government debt pile. It's risen up towards 650 billion, just over 640 billion per year. It reached a record in July, but it's still rising parabolically. In fact, in August was the biggest ever increase. In September was the second largest increase. And it's really risen parabolically since the start of 2022 or the end of last year. It's all about the change in yields. Now, this is really going to play into the midterm story in 2 weeks' time. What is interesting is the last time it was rising this sharply was actually back in 2018 when we were also going into midterms, and it was a really big topic then. Well, it should be much bigger now because we're at much higher levels. It's still rising much more parabolically, and I think this is going to weigh on the US over the year ahead. It's not a short-term trading issue, but it's going to provide a long-term headwind for the US dollar and US equities because it will constrain the US government's ability to spend and react to downturns.
All right, Mark, thank you so much. Mark Cudmore there with the cost of U.S. debt servicing, our MLive managing editor. Now, British Prime Minister Rishi Sunak has named most of his cabinet, confirming Jeremy Hunt will remain Chancellor of the Exchequer. Downing Street unable, though, to confirm if Hunt would stick to his plan to outline the government's spending and tax strategy on October 31st. Well, joining us now is Bloomberg's Lizzie Burden. Lizzie, first of all, the budget is extremely important because the Bank of England then meets on November 3rd. What's that dynamic going to look like?
is really the big question for markets, this one. We have Rishi Sunak's new cabinet meeting for the first time this morning, including the new Chancellor, Jeremy Hunt, and we're hoping for confirmation after Hunt and Sunak have spoken. The Times is reporting that Sunak wants to delay, potentially by a couple of days, this statement, because it's going to be premiership defining. As Hunt put it, there are eye-wateringly difficult decisions to be made, but Hunt, though, is said to want to stick to the original date so that potentially the Bank of England can make a smaller rate hike. Either way, the good news is that Charlie Bean, former BOE and Office for Budget Responsibility official, has said that because of Rishi Sunak's calming effect on the markets, as you pointed out a moment ago, means that this fiscal black hole Jeremy Hunt needs to plug has shrunk from £40 billion to £30 billion. So potentially fewer eye-wateringly difficult decisions needed.
Yeah, and Lizzie, we just also heard Jeremy Hunt spoke to Andrew Bailey yesterday, and they mutually agreed to work together to restore confidence in the UK economy. I mean, this is supposed
Yes, and it's the same message that we've heard from the Deputy Bank of England governors in recent days. It seems that the economic orthodoxy is back in Westminster. The institutions are working together again. And I think it was an important point made by Deputy Governor John Cunliffe the other day that under the Truss administration, Bank of England officials were sidelined by the mini-budget. And he really laid the blame at the door of ministers, not officials. So already you can see that the cooperation is back under the Sunak administration.
All right, Lizzie, thanks so much. Lizzie Burden there live from Westminster for us. Now, joining us now is Bloomberg's Justina Lee and Fabiana Fedeli, Chief Investment Officer for Equities at M&G. So thank you both for being with us. Fabiana, let's start with you. When you look at what we've lived through in the UK over the last 2 to 3 weeks, is there a concern that actually the market will be disappointing because they have such high hopes for this new Prime Minister?
Good morning, Francine. There is always a chance that the market will be disappointed, but I think as Jeremy Hunt has been reconfirmed as Chancellor, that has been a real sign of relief for markets. Markets like orthodoxy, markets like conservative attitude towards fiscal policy, and that is what Chancellor Hunt should bring. Now, the one element that could surprise markets negatively is if we don't have a budget by the 31st of October. That would be something that markets would definitely prefer, because it would give the Bank of England some context around their rate rise. But otherwise, we are in a better situation than we were a couple of weeks ago.
Let me also bring in Justina Lee. Justina, when you look at, of course, the dynamic, right, between Treasury and the Bank of England, I know that it would be problematic if they didn't go ahead with the fiscal plans on October 31st. But at the same time, they're talking. So it's not the same thing. It's not the same dynamic as we saw 3 weeks ago.
Right, exactly. And it's kind of miraculously that gilt yields are back to where they were, before those tax cuts. So it kind of feels a little bit like all that drama was for nothing. But it's not just because of, Rishi Sunak becoming prime minister and all that U-turn, but it's also because, gilts have had this support from global bond markets as well. I mean, we've been seeing this really strong rally out of the Treasury market because now people are talking about a Fed pivot again, now that we're seeing U.S. economic data softening.
Fabiana, if you stay back in the UK, I mean, if we have, a lengthening of the process to really understand what the Bank of England can or can't do, or if they're not aggressive enough in dealing with inflation, does it make you more or less bullish on UK equities?
UK equities actually are quite separate from what is happening on the fiscal side and the gilts market, particularly when you look at the largest equities in the FTSE 100. Those are companies that are extremely attractive in terms of valuation. They are exposed to non-pound revenues. So we've been actually liking UK equities, also the largest companies within the index, also during the period of volatility. I would say the more difficult area is going to be the companies that are more exposed to the UK economy, and the UK economy will be difficult for some time.
Are there any bargains that actually you can pick up right now for these companies on the FTSE 250, for example, that are under extreme pressure?
There are very few, and you really need to be selective. And possibly, as we're going to hear more from the fiscal policy decisions, there will be better opportunities to buy.
Where do you see the pivot ending, Justine? I mean, one of the big questions is that the market has always believed that there's a Fed pivot, but actually, even if they're going to maybe not go to 2%, but 3%, it does mean that there's going to be a lot more hikes ahead. Is the market just too optimistic on how much pain they can get through?
Yeah, I think that's the question right now, because earlier when there was pivot speculation, the last time people were pretty disappointed. But I think people are getting their hopes now again after, home price data yesterday showed the, slowed the most since 2009, and we have consumer confidence kind of rolling over. And so now people are getting a bit more confident that maybe we can start looking ahead to 2023. Will there even be a rate cut then? And that's why we've kind of seen even the short end of the Treasury curve kind of starting to come down because of all these economic risk. And we have had some comments from Fed officials about starting to look ahead to when is a good time to kind of turn that monetary policy around.
Fabiana, are you expecting a Fed pivot?
I'm not expecting a Fed pivot anytime soon. The Fed is going to be data-driven, and I wouldn't exclude that 4.5–5% level sometime next year. But the truth is, not even the Fed knows if that's going to happen, because it will really depend on what happens to core CPI, and also if labor numbers continues to hold up. The one thing that I would say is you're seeing some pretty interesting opportunities right now on the Treasury side. You have a US 30-year that is 40% down in price year to date. That discounts a lot of potential volatility going ahead and a lot of rate rises. So there are some opportunities, and we have been adding to long end duration.
Great. Thank you both for joining us. Justina Lee from Bloomberg and Fabiana Fedeli, Chief Investment Officer for Equities at M&G, stays with us. Now we'll have plenty more, of course, on the markets. We'll recap what we've heard so far from European bank earnings. That's coming up. We'll also have plenty more on the market reaction to that new UK cabinet. This is Bloomberg.
Earnings season is here.
With so much to discuss today.
Strategists are quite spooked.
Bloomberg is fastest with the numbers and analysis.
LVMH beat forecasts with higher sales.
Do fundamentals even matter right now?
Bloomberg, the fastest numbers and analysis you trust.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 13 minutes into the European trading day, and actually we're seeing a little bit of pressure across the board. Tech giants did push down some of the U.S. futures. That's probably filtering through to Europe as well. We did have some positive signs, for example, from Chinese central bank and foreign exchange regulator, indicating that they would maintain a healthy development of stocks. So we thought that could give a little bit of a boost to some of these European equities, but not so far, down some 0.3%. So it's a big week for European bank earnings, with Santander, Deutsche Bank, and Barclays reporting today. Santander's earnings beat estimates as a revenue boost from higher rates across key markets counters higher costs from inflation. Now, the bank's chief financial officer, Jose Garcia Cantera, spoke to Bloomberg in an exclusive interview.
We are not seeing asset quality pressures yet. Obviously, this will very much depend on the type of slowdown that we face in the next few quarters, but the bank is better prepared than ever to withstand any asset quality deterioration that we might see. But again, we are not seeing any asset quality pressures at the moment in any of the markets where we operate.
Well, joining us now is Bloomberg's finance managing editor, Michael Moore. Mike, great to have you on the program. I mean, there's so much actually looking at what, banks are benefiting. So first of all, there's a Fed pivot. I don't know what it means. Well, there's a belief in the markets that there's a Fed pivot. I don't know what that means for some of the bank earnings here in Europe.
Well, I think the march, and it's just a question of how fast it comes, but the march toward higher rates is happening, and the banks are benefiting from that. And right now, you do have this kind of sweet spot where rates are going up. It's pushing up the net interest income of these banks. But as the Santander CFO was saying, they're not seeing it on the asset quality side yet. That's the big question going forward. Is this net interest income boom going to be matched by a rise in provisions as more loans go bad? But we're not seeing that yet. So the banks are benefiting right now, and this is something they've been waiting for a long time.
But who's benefiting the most, Mike? So of course, not every bank is created equal. Depends if you have much more of a consumer mortgage lending. In Europe, is there a part of Europe, but also exposure, for example, to emerging markets like Santander that would benefit?
Yeah, I mean, you're seeing it in Santander. You really are seeing it kind of across the board. It depends on, the business mix. Yeah. But you saw it today with Deutsche Bank and their corporate bank, revenues were up quite a bit. And UBS, it was more on the wealth side, the lending to wealthy clients. But the rates are kind of flowing through a variety of businesses. Where we've seen the weakness has been on the investment banking side. There's just not a lot of IPOs right now, not a lot of mergers. With markets being wild, you've seen some markdowns on the leverage finance side. So that's where we've seen the weakness, but that's been somewhat offset by trading.
Where do you see this going forward in general? If you look at some of the loan distresses, if you look at some of the mortgage pressures, how much will they increase by?
Yeah, I think that's the big question, and that's where a lot of investors have focused on the forecast that the banks have given, and they've been pretty cautious on that. I think, we haven't seen a lot of pain so far, but banks are starting to increase those provisions to try to get ahead of that. I think the big question is, does this start to flow through with people falling behind on mortgages, falling behind on credit card payments? Or if it doesn't, and the banks continue to benefit from this, will we see that become a political issue? We've already seen talk of windfall taxes in a few nations. So will that become the latest hit on bank profits?
Mike, thanks so much, Michael Moore there, Bloomberg's managing editor for finance. Now we'll have plenty more, of course, on the banks. We need to look individually also what we heard from Deutsche Bank and Barclays. Still with us, Fabiana Fedeli, Chief Investment Officer of Equities and Multi-Asset at M&G. Fabiana, when you look at banks, I mean, they're kind of a great barometer of what consumer spending will do, and of course mortgages, and they could potentially see a housing crisis. Are you, concerned that for the moment everything seems fine and then it could fall off a cliff early next year?
I think the price behavior of banking stocks at the moment is really uncharacteristic of a period pre-recession. And that is really due to, as Michael was referring to the fact that they are helped by the rising interest rate environment, and you've seen it flow through to earnings. Clearly, banks don't know what's ahead. You've heard a number of managements talking about uncertainty ahead, starting to prepare. So it will really depend on how shallow or how deep the recession is going to be going forward, and what the impact will be on credit health. And so far, it looks like the recession is not going to be 2008 kind, but obviously we have to be prepared to that, and banks are being prepared.
So, Fabiana, do you buy banks at the moment? I don't know whether you're more sector group allocated or whether it's more regional that you look through.
So it has been very selective, which, by the way, has been the modus operandi that we have implemented over the last few months of market turbulence. We have liked so far U.S. banks more because they would give us more exposure to the interest rate rise and possibly more credit, if you want, hedging from the health of the overall balance sheet perspective. Going forward, we also like emerging markets banks. You've seen a number of them reporting over the last few days, strong reports. Obviously, European banks are inexpensive, but we really need to see what that means from a recession ahead. What they will do, they will benefit more now from the interest rate rises. For the US banks, you're probably going to see a rollover of the benefits from the rate hikes. That is just starting for European banks. But again, for European banks, you have more risks ahead from a recessionary standpoint.
Fabiana, thanks so much. Fabiana Fideli there, Chief Investment Officer, Equities and Multi-Asset at M&G. Coming up, some of the biggest U.S. tech stocks tumble in after-hours trading following disappointing results from Alphabet and Microsoft. More on that next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to the Open, everyone. We're 23 minutes into the European trading day. You can see we're not, we're not at the day's lows, that's for sure. We opened the day about 0.4% lower, we're now 0.1% lower. The focus on some of the data points, and then the big one here in Europe, of course, is the ECB. Here for the UK, we find out whether there's a fiscal statement on Monday or not. Now, some of the biggest US tech stocks tumbled in after-hours trading after disappointing earnings from some of the big names. Now, joining us now is Matt Bloxham from Bloomberg Intelligence. There you go, Matt. I'm losing my voice because we're so excited about all of the earnings. What are the key takeaways from yesterday's earnings?
Yes, obviously quite a bit of currency headwind there, about 5 percentage points of year-on-year drag, but then, slowing demand for advertising, slowing demand for PCs, slowing demand for cloud. So just, like it's not that surprising. The global economy has been slowing for quite a while, and we've been waiting for this to come through in some of the bigger tech stocks' earnings, and it's just starting in Q3.
So what's the latest? I mean, if you look at some of, we had some of the big names. Is there one name that you find more interesting because it's maybe symptomatic of something that could happen to others in 6 months from now?
I mean, I guess the Google story kind of encapsulates a lot of everything. So you've got growth in cloud revenue, so they're kind of a rival to Amazon in particular and Microsoft, but it's still loss-making. So I think people want to see that turn to a profit. But they're also starting to see slower growth in their kind of search advertising. So they are a bellwether for the health of the advertising industry generally. So that suggests that clients are reining in their budgets as they face margin pressure. But they're also seeing some of the structural pressures in advertising. So their YouTube business shrank year on year, and that's essentially because TikTok is pressuring all of those kind of video-led platforms. So there's kind of structural and there's cyclical pressure going on in Google.
I'm going to do a TikTok with Matt Bloxham in a second, so you better watch out, world. What's the latest on Musk and Twitter?
So the latest is that he's had a video conference with his debt bankers telling them that he is planning to close the deal on Friday. So they should definitely get that $13 billion of debt he needs to finance the transaction in place. So it seems like we are heading towards Musk ownership of Twitter by the end of the week, but there are potentially still some twists and turns between now and then. Who knows? Obviously, there were some question marks about whether the US was going to investigate for security issues. I think yesterday a White House official said that wasn't the case. So I think that issue's gone away now too. So difficult to see what could block a deal closing on Friday, but maybe Elon wakes up today feeling in a different mood and the world changes again.
Watch him on Twitter, and then Meta reports today, of course, but it was I think down some 4% after hours. So we'll have to get you back on that. Yesterday there was a huge outage, right, of WhatsApp for like hours.
Right. Yeah, and globally, yeah.
So they'll need to address that. So Matt Bloxham from Bloomberg Intelligence, thank you so much for joining us. This is a picture for the markets. A bit of pressure across the board. Again, we did have some disappointing results from Microsoft and Alphabet. That's exactly what our Matt Bloxham was talking about. Coming up, it's an earnings beat for Deutsche Bank. More from our interview with the Chief Financial Officer, James von Moltke. That's coming up shortly, and this is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Bank earnings in the spotlight. Deutsche Bank and UniCredit lift their revenue outlooks as higher rates boost trading. For Barclays, it's a miss. Big tech battered Microsoft, Alphabet, and Texas Instruments tumble after hours as weak earnings hit some of the world's top companies, plus a new prime minister. Rishi Sunak appoints his cabinet, and The Time reports he may delay next week's fiscal statement. So this is a look at the indices. Again, we did have some disappointing results, actually, from a lot of the tech companies, Alphabet, Google, but it doesn't seem to be filtering through Europe as much as it did about half an hour ago. So we did start the day on a low, down about 0.4%, and now we're pretty much flat with the FTSE, just a bit of pressure there, but still flat. The picture is, of course, all the equity markets, but also all bond markets. We'll look at what the ECB does tomorrow, and then we get on to next week with the Bank of England exactly a week from now, well, a week and 1 day on November 3rd. What they'll be able to do or how aggressive they're able to hike depends on whether they know about the fiscal plans ahead of time or not. Right, let's get straight to the sectors that are on the move. This will be a good indication of whether it's true that traders come in and are trying to find some cheap bargains. That's our story on the UK, because Rishi Sunak seems to be giving the market a bit more boost, a bit more confidence that maybe they didn't have under Liz Truss. Construction, healthcare, chemicals, the biggest gainers, gaining some 0.8%. And then you have technology and consumer goods down between 1.4 and 0.9%. Now, returning to one of the big stories this morning, Deutsche Bank says it may exceed its full-year revenue target after beating third-quarter earnings estimates. The Chief Financial Officer, James von Moltke, spoke to our Danny Berger a short time ago about those strong earnings.
What we're focused on is having a portfolio of businesses that can sort of create some earnings stability throughout the cycle. And you're seeing that now with very strong FIC and relatively weak or very weak origination advisory. I think that will sort of change again, or there'll be a rotation in 2023 as volatility begins to stabilize. You know, the markets now, I think, have a clearer view of terminal rates for interest. I think there'll be a settling once we have visibility into the path of both interest rates and the economy.
So as that deal flow then comes back 2023?
And I think at that point, the deal flow begins to come back. In a sense, macro shifting back to micro at a point in time, at which point origination advisory and for example, the credit business within FIC markets would likely start to come back.
When do you see that happening? When in 2023?
If I had to guess, it'd be the second half of next year. So I think there's still some time to go on this more volatile environment. As you say, it's important as well that the businesses that we have that have large deposit books and who are based on growing loans, so corporate bank and private bank, they're now seeing real momentum, benefiting from interest rates, but also client activity.
But when it comes to those riskier loans, the leveraged loans, is now the time, until the environment normalizes, to get low to the ground, to cut back on risk?
Well, look, our commitment pipeline at this point is down to only about $2 billion, and we think we've marked that now appropriately to the current conditions. it's a feature of the leveraged debt capital markets that there'll be a backup every once in a while when financial market conditions change. The banks work through their pipelines, and then as investors and also issuers find sort of a more accommodative environment and more predictability in terms of pricing, the market reopens. And you're beginning to see that already in the third quarter.
That was the Deutsche Bank Chief Financial Officer, James Moltke, speaking to our Danny Berger. Let's get straight to Frankfurt and to Danny. Danny, can you walk us through the numbers from Deutsche Bank?
Yeah, really strong when it came to FIC, especially. A lot of that thanks to market volatility, beat most of Wall Street peers as well. Net interest income, that also got a boost, about 30% year over year. But the issue was, or at least one of the issues, was deal-making fees. He talked about it there. They dropped about 85%. Also, when you include some of the write-downs, some of the issues they had with the leveraged loan market. Now, shares are losing a bit of steam. You can see they're down about 0.2%. Some analysts are flagging their higher costs than expected. So that might be dragging them down. But again, revenue very strong for this quarter.
We do seem to have overall pretty strong business. But of course, Deutsche Bank, Danny's operating in a pretty difficult economy. What did he say about how things can get more difficult in the future?
Von Moltke talked about this idea that we're going to have a deep restructuring in this German economy. He thinks there'll be a recession, around a 2% drop of GDP next year. But beyond that, in years to come, he said, look, this German economy needs to change, whether it be to figure out energy costs, whether it be trade with China, whether it be exports. He said it needs to change. Now, in terms of crises, he doesn't think that it's going to emanate from the banking sector this time around, just because they're better capitalized, there's more regulation. But he did see some risks outside the banking sector. Francine, take a listen to that.
The market is uncertain how much of the risks and where has gone into the non-bank sector, the less regulated sectors. And so is there sort of, there are going to be shoes to drop in that area? That's probably the greatest degree of focus. And then also what we sometimes call cross-asset risk. So ways in which asset markets talk to each other that models sometimes don't predict. Those are two areas that we're looking for and looking out for potential risks and surprises. Yep.
Oh, Credit Suisse is going to love this, Danny. Deutsche Bank CFO also had some advice on its restructuring.
Yeah, of course, Credit Suisse will be unveiling that tomorrow. I mean, I had to ask the question, of course, because Deutsche Bank went through it itself more than 3 years ago, went through restructuring by most measures, was extremely successful. So Von Moltke said, what made it successful? He said they were decisive and it was disciplined. And then I said, okay, then what's your advice for Credit Suisse? He said that they need to be patient, they need to focus on literally every detail, and they need to, quote, bring your people along. Of course, we know Credit Suisse has had some issue when it comes to high-ranking departures, Francine.
Yeah, and also, I guess there's only so much patience a shareholder can have. Danny, thank you so much. Danny Berger there in Frankfurt. So let's get back to the UK. The Treasury has confirmed the UK Chancellor, Jeremy Hunt, spoke with the Bank of England Governor, Andrew Bailey, yesterday. Now, it comes just days before Hunt is due to deliver his fiscal budget plan, with some reports suggesting it could be a delay. Now, for more on all of this, let's bring in Bloomberg's Stuart Wallace. Stuart, great to have you here on the show this morning. So, look, there was a bit of concern that if the fiscal statement would be delayed, this is very tricky for the Bank of England because, of course, they decide then on the Wednesday, so 3 days afterwards. But they're talking. So this is different from 3 weeks ago, right? At least we have the Bank of England and Treasury that get on the phone and talk to each other.
Yes, although I would say the circumstances under which are happening should be worrying, right? The fact that they're having to talk that much suggests something is not quite right. And again, let's not forget recent history. You know, the last few weeks have been pretty traumatic, not just for the markets, but for the country more widely. So I think the current Prime Minister and Chancellor have more credibility than their predecessors. I don't think that's a controversial thing to say, but nonetheless, the market is looking very carefully at this pair and really needs some strong signals on which direction we're going to go in, and they're not getting it at the moment.
Yeah, so do they need to work together? And again, the fact that they spoke on the phone yesterday, how promising is that? Because I guess the worry is that the Bank of England then isn't aggressive enough of an interest rate hike, and it kind of does a bit of a timid hike because they don't know what is coming up fiscally.
Right. I mean, the BOE's job is to respond to government policy, right, and work around that. That is the central role amongst others, I would argue. So in a situation where it doesn't know what's coming down the pipeline, it can't possibly come up with sensible policy decisions, I should say. So it does leave the market in a very difficult place. Who does it pay attention to? What exactly does it believe, and how do you trade? You know, how do you value UK assets at the moment when you don't know what the budget's going to look like and you have no idea what the Bank of England might do? We think we know, but we don't.
Okay, but the best opinion piece that everyone should read today for me is something by Narayana Kocherlakota, formerly of the Fed, saying that the markets did not oust trust, the BOE did, and sometimes maybe, I mean, we've been giving it so much flack over the last 3 weeks. It's a good read for everyone. We'll push it out on social media as well. So the Prime Minister also talks about this profound economic crisis.
Yeah.
How bad will things get?
I mean, they're already pretty bad, right? We've got inflation at a 40-year high. We've got the highest inflation in the G7. We've got very low unemployment, but that's not a good thing in a context where, as you know and I know, so many businesses are not able to get enough workers. So Sunak inherits a pretty awful economy. I mean, there's no other way of describing it. And he has very limited options in trying to get it out of that hole because he hasn't got much money to play with. And fundamentally, he's got a market at the moment and people that are willing to lend him money that are somewhat skeptical that this is as stable a government as it has traditionally been.
Yeah, measured and careful, and great insight from Stuart Wallace, as always. Bloomberg's Stuart Wallace, the very latest on the UK. Now, coming up, counting down to COP27, don't miss our exclusive interview with Sameh Shoukry, Egypt's foreign minister and COP27 president-designate. That's coming up shortly, and then later today, we have another exclusive you'll want to tune in for. Youssef speaks to the Saudi finance minister at the FII conference in Riyadh. This is Bloomberg.
They're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Welcome back to the Open, everyone. We're 42 minutes into the European trading day. We're seeing a bit of a reversal, but still, overall, a bit of pressure. U.S. equity futures certainly falling. There's concern about mega-cap technology stocks after they came out with some worse-than-expected earnings, and then oil is also dropping. So we look at the banks, a lot of earnings. When you're in earnings season, it's very often the case that actually markets are pretty volatile. We look at ECB tomorrow and then the BOE on November 3rd. And now in 2 weeks, representatives for nearly 200 countries will head to Egypt for this year's UN Climate Summit. Implementation will be the name of the game as parties debate how to realize the Paris Agreement, as well as a plethora of pledges and initiatives announced last year. Now, joining us now is Sameh Shoukry. He's a COP27 president-designate and Egypt's Foreign Affairs Minister. Minister, thank you so much for joining us. We're looking forward to being in COP27 and covering everything that you'll push forward. What are your top 3 priorities in getting the job done?
Well, definitely, as you mentioned, implementation, parties indicate their revised NDCs, and that the initiatives that will be presented will find a wide range of endorsement. Finance as well is the main issue that has to be addressed, as well as issues related to adaptation and loss and damage.
Minister, we're seeing from a lot of countries, especially African countries, being very vocal about the issue of compensation for some of the impacts on global warming, at the same time maybe getting an exemption for fossil fuel in countries that need to focus on growth. Will you be promoting those 2 issues?
Well, the vast majority of developing countries have indicated the importance that they attach to the issue of loss and damage and to the issue of mitigation and the need for finance to be able to undertake their responsibilities in fighting climate change. This also relates to the importance of recognizing the just transition to renewable energy. They certainly need to continue their developmental objectives, and to do so in a manner that is just and equitable. They need the support of the developed nations in that regard.
I mean, how do you deal with finance for adaptation that at the moment remains insufficient? And do you worry that a lot of the goals or the goodwill has evaporated with the war in Ukraine?
Well, the global goal adaptation will be a watershed moment for indicating the amount of commitment that the international community, the parties have. We need to see greater equity between finance for mitigation and adaptation, taking into account that for mitigation, there are benefits, economic benefits. There is a return on investment, whereas adaptation, the return is much more impactful because it deals with the lives and livelihoods.
But Minister, where are we falling behind? I know there seemed to be a real shift in financing. I know that's something that there was also a proponent from the IMF and the World Bank, green bonds, but also just making sure that we're greening finance and some of the loans available. Has that taken a back step?
Well, we I think have to wait and see. The NDBs have indicated that they are revising their conditions so as to provide finance more readily and at less cost to developing countries. Until that is completed, we will put our faith in their commitment. We also, I think, have to recognize that the general environment is somewhat stressful economically, but that doesn't mean that we shouldn't continue to strive to deal with climate change. It is an existential issue, and there's no avoiding it.
But are we putting energy security before climate change? And again, does it mean that we'll have a lot of the pledges that put in place in Glasgow that will be watered down?
Well, if backtracking is the name of the game, then we are all lost. There is no opportunity for countries or parties to backtrack because of the impact. If we reach a point of no return, then I think we won't be able to speak about security in any sense. The globe will continue to deteriorate, and we will see the very devastating consequences, as was the case in most recently in Pakistan.
But do you see backtracking?
Let us say that I am optimistic that there won't be any backtracking, that parties will continue to understand the severity of the crisis, the environmental crisis, and that there is no way that we can avoid to do what we have committed to. There are always there is an ability always to find the new and innovative ways to meet the challenge, and at the same time take into consideration the pressures that exist.
Minister, Egypt has recently joined the global methane pledge. When are you expecting that to be, concrete? When can we see action on that? And is there anything like that was a big deal in Glasgow that you're expecting for Sharm el-Sheikh?
Well, there will be a number of both national, regional, and global initiatives that we will be rolling out. Other parties will also provide their inputs, and we hope that this will generate the necessary momentum for us to move forward.
Minister, Egypt, of course, like many countries, is facing severe challenges because of the war in Ukraine, food prices, inflation. How are your foreign friends and allies helping you in this challenge?
We are looking at our, as you said, friends and allies who recognize the importance of maintaining food and energy security and meeting the challenge economically that exists. Egypt, like many other developing countries, is suffering from the consequences of the war in Ukraine, and we are in constant contact, whether within the mechanisms of the United Nations or in terms of our bilateral relations to compensate for our needs, especially in the food sector, but also the pressures of increased costs of energy has put a burden on our budget.
Thank you so much, Minister, for joining us. Hamish Shukri, they're the COP27 President-designate and Egypt's Foreign Affairs Minister. Now, coming up later today, we also have another exclusive you'll want to tune in for when Youssef speaks with the Saudi Finance Minister at the FFI conference in Riyadh. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
Welcome to Bloomberg Crypto.
So in terms of us, the results are driven by the implementation of our industrial plan, which is ahead of target. Clearly, rising interest rates are helping the NII line. They are also, however, affecting negatively our fee line, and they are also, through inflation, affecting our cost line. Notwithstanding that, we have 9 months with our top line up more than 9%, our cost down almost 3.5%, and our provisioning levels are very low due to a number of reasons. One of them are we have a very sound portfolio to start with. Secondly, we started early provisioning, so we are fully maxed out on our specific provision on the book and have early staged 26 billion late last year. And finally, we're doing overlays to create a further buffer and prepare for the shock that may arrive next year. So when you pull all of this together, I think we have strong profitability results, but that take account of sound provisioning policies in an environment where the cost of risk has not risen yet.
More of that interview. I think there were questions, of course, that Mark and Anna were asking. I don't think we quite caught that on tape, but we'll bring you the very latest from that interview. Let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. Rishi Sunak has named an experienced cabinet to lead the UK through what he calls a profound economic crisis. Jeremy Hunt is to remain Chancellor of the Exchequer, but Downing Street has not confirmed if he'll stick to delivering a fiscal update on the 31st of October. Suella Braverman is back as Home Secretary just days after Liz Truss fired her over a national security breach. Now, Bloomberg has learned that Elon Musk has pledged to close the acquisition of Twitter by Friday in a video conference call with bankers. Sources say the lenders are putting up $13 billion of debt financing, and they've now finalized a credit agreement and are in the process of signing that documentation. The move marks one of the last steps before actually sending Elon Musk the cash. And Europe suddenly has more gas than it can actually use. Starved of Russian imports, the region has filled storage facilities with LNG cargoes from around the world. Combined with the usually warm weather that's seen gas prices fall back sharply to less than a third of their summer peak, Bloomberg's weather model suggests European temperatures are set to stay milder than usual, and that will be well into November. Alphabet's revenue and earnings fell short of expectations as Google's advertising business began to show, well, signs of weakness. There were disappointing results across the tech giant's sprawling portfolio, with sales missed estimates as YouTube, the key search unit. Alphabet says it plans to slow hiring and also control expenses. Microsoft shares slumped in late trade after its weakest quarterly revenue growth in 5 years. Sales were throttled by surging dollar and a drop in sales of Windows software to PC makers. Excluding the dollar impact, sales for its Euros cloud service rose 42%, also below expectations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Leanne Gerrans here in London with me. Now, that's it for the European Market Open. Surveillance Early Edition is up next. This is what the markets are thinking of. The ECB tomorrow is the big one to watch. U.S. equity futures actually falling along with stocks in Europe after some pretty dire earnings news. Post-market slumps in mega-cap technology really marred this three-day rally on Wall Street. It's also been raising new doubts over whether this year's $5.5 trillion sell-off isn't nearing a bottom. A couple of other things I'm watching, of course, is also the banks. So it's not only about the Google parent Alphabet, but also some of the banks that actually came in with better than expected results. Treasuries extending gains, the 10-year yield falling to around 4.05%. This is Bloomberg.
always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Bank earnings in the spotlight. Deutsche Bank and UniCredit lift their revenue outlooks as higher rates boost trading. For Barclays, it's a miss. Big tech battered Microsoft, Alphabet, and Texas Instruments tumble after hours as weak earnings hit some of the world's top tech companies. Plus, new Prime Minister Rishi Sunak appoints his cabinet as The Time reports he may delay next week's fiscal statement. So first thing is first, let's check on the markets. We actually opened lower after that slide because of tech earnings. A lot of questions on whether we've seen the worst of the sell-off. Reminder, we've lost $5.5 trillion since the beginning of the year. And the question is whether that nears a bottom. European stocks, you can see pretty much flat. Banks, maybe a little bit under pressure, down some 0.3%. Although Deutsche Bank, or Danny Burgers in Frankfurt, bring us that interview. They did better than expected on a lot of metrics. Certainly their traders did better than a lot of the Wall Street banks. U.S. 10-year yield 4.04, and then the dollar index 132.1. The picture overall is not only one of earnings, and we do see a bit of volatility when it comes to that, but a lot of it is also what we do with central banks. So the ECB, of course, based in Frankfurt, comes out with an interest rate hike tomorrow. Then a week after, it's the Bank of England here in the UK. And then I would also watch this country, Italy, down some 0.2% for the markets. At the moment, not really latching on to that, but we had the first speech of Giorgia Meloni in Parliament yesterday, and she really went after the ECB, saying they should not hike rates. One of the feistiest speech against the central bank, certainly from a G7 country. Now, the British Prime Minister Rishi Sunak has named most of his cabinet, confirming Jeremy Hunt will remain Chancellor of the Exchequer, but Downing Street was unable to confirm if Hunt would stick to his plan to outline the government's spending and tax strategy on October 31st. Now, outside number 10, Sunak reiterated the tough economic challenges the country faces.
Right now, our country is facing a profound economic crisis. The aftermath of COVID still lingers. Putin's war in Ukraine has destabilized energy markets and supply chains the world over.
For more, we're joined by Bloomberg's Lizzie Burden. Lizzie, Rishi Sunak appears to have kept his friends close, his enemies closer in his cabinet appointments. What does this say about how much experience he wants in his administration?
Well, he's rewarded experience, but also a firm nod to party unity. He's kept the same three holders of the great offices of state that Truss had just a week ago. And it's really avoiding the mistake that she made of surrounding himself with loyalists, though ironically that means that he is now surrounded by Truss allies. It also means that they don't need time to settle in. As you say, Jeremy Hunt is staying at the Treasury. He can deal with the crisis from the get-go. And instead, Sunak has had to reward his allies with positions lower down the pecking order. So, for example, Mel Stride, his campaign chief, takes work and pensions, but that is an important role at this stage, given the debate over whether benefits should rise in line with inflation, and Mel Stride has indicated that he favours that should happen. It also means that Suella Braverman remains Home Secretary just 6 days after she was sacked for breaking the ministerial code, just after Sunak has said that he's going to rule with integrity, but it's the result of him having to do a deal with the Tory right. That could be a point that is picked up at Prime Minister's questions by Keir Starmer today, and it also means no promotion for Penny Mordaunt, perhaps punishment for not conceding till the very last minute in the leadership race.
So, Lizzie, it's the first face-off, Prime Minister's questions between Rishi Sunak and Keir Starmer. What do you expect?
Well, it's billed as boring versus boring, Francine, but that's a welcome thing for many in Westminster and around the country, that we've got this new era of British politics, mercifully, many would say. One of Labour's main criticisms of Rishi Sunak when he was Chancellor, the line used to be, we'd do the same thing, but we would do more of it and faster. So it may be more difficult for Starmer to oppose Sunak. I would expect, as I say, criticism of the reappointment of Truss allies like Suella Braverman. It would suggest that Sunak agrees with the policy of sending asylum seekers to Rwanda when Sunak has promised compassion. But Sunak really headed off a lot of the criticism you would expect Starmer to make today. For example, calls for a general election, by saying in his speech in Downing Street yesterday that he's going to deliver on Johnson's mandate from 2019, hence the references to Brexit, levelling up the National Health Service. He addressed the concerns about his predecessor's mistakes, and the concerns as well that he's too rich to deal with people's real struggles in this cost of living crisis. But interestingly, a YouGov poll says that 2/3 of people continue to think that Rishi Sunak is out of touch with ordinary people.
Lizzie, thanks so much. Lizzie Burden there with the very latest on the UK. Now let's get straight to Themos Fiatakis. He's Global Head of FX Research at Barclays. Themos, when you look at the UK, the most interesting bit is, of course, whether we have the fiscal plan, the Halloween budget, as it was dubbed, on Monday, because then on Thursday we have the Bank of England decision. If this gets delayed to post-BOE, how problematic is it for the Governor, Andrew Bailey?
I think a big part of how the Bank of England has basically described the problem is that you have a very difficult underlying situation, and you have an overlay of fiscal policy which can either change the situation for more hikes or just reduce the amount of hikes that they need to do, but still the bias is for higher rates. There was a very seminal speech by Ben Broadbent last week that basically described that even in the presence of some fiscal easing, you would still need to undershoot what the market is pricing. And, Sunak is probably standing for a little bit less fiscal easing than before. So the overall setup for the Bank of England is a setup where they need to hike, but less than what is priced in. And how far less will depend on the budget. And, I think that they're, for the next meeting, they don't have enough information to rely on in terms of that bit.
But Themos, I guess the market, and I don't know whether the market is under or overpricing this, right? But the market is afraid of what happened about 4 weeks ago, which is we didn't have the fiscal plan, the BOE does something, they're not aggressive enough, the market crashes. This time we had a call between the Chancellor and the Governor. So is it this time differently if two sides speak to each other? Does it really matter to the markets if the fiscal statement is postponed, as long as they speak to each other?
A little bit, as you allude, a little bit less than before, for sure. And, a big part of the reason is that the broader market assumption is that, particularly based on the market knowing Sunak's platform from his tenure as Chancellor of the Exchequer, that it's not going to be a fiscally expansionary platform. So at the end of the day, the trade-offs that the Bank of England is facing are a little bit less punitive. They don't have to do as much as they would have to do, let's just say, on the budget that was released in late September. So that part of the detail matters less. But as you said, the key risk still for the market is that they get underwhelmed regardless of fiscal.
Okay, Demos, what's your call then on sterling going forward?
I think sterling probably weakens. The UK is facing two shocks. Obviously you have an external shock to energy prices, and notwithstanding the drop in natural gas prices, remains a very difficult shock to the economy, a stagflationary shock. The UK economy is also facing a decline in its labor force as a result of Brexit conditions. And that seems to be an additional layer of weakness for the pound, an additional problematic zone for the Bank of England. The pound has stabilized because the Bank of England is now priced to hike more, and the Bank of England will likely not hike as much as they're asked to by markets. And in this setup, given that this new government doesn't show a signal that it's going to particularly change the labor market situation by more migration, those dilemmas will probably stay. So this rally or relief that we're seeing for the pound, probably a little bit temporary.
All right, Demos, thank you so much. Demos Fiotakis there, Global Head of FX Research at Barclays. Now, coming up, we'll discuss all the action in the FX markets and the implications also of a surging dollar. That's coming up next, and this is Bloomberg. Later today also, you don't want to miss Youssef's exclusive interview with the Saudi finance minister at the FII conference in Riyadh. I know I'll be tuning in for that conversation on geopolitics. This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
We are not seeing asset quality pressures yet,
Obviously, this will very much depend on the type of slowdown that we face in the next few quarters, but the bank is better prepared than ever to withstand any asset quality deterioration that we might see. But again, we are not seeing any asset quality pressures at the moment in any of the markets where we operate.
Well, that was Santander's CFO, Jose Garcia Cantera, speaking exclusively to Bloomberg after the Spanish lender beat estimates. Now, in other earnings, Microsoft posted its weakest quarterly revenue growth in 5 years, thanks in part to a surging U.S. dollar. Now, here to discuss the implications of a strong dollar, Themos Theotakis, global head of FX research at Barclays. He's still with us. Themos, how much higher can the dollar go?
I think that we are probably at the last sort of like legs of dollar strength. It's pretty clear that, you know, a lot of the components of the U.S. economy are starting to show some peak, whether that is wage growth or whether that is inflation growth or whether that is, you know, the housing market, etc. At the same time, we had a very bearish view on Asia, given our view was that zero COVID policy was here to stay, and that would be an additional impetus for the dollar. Now this is a lot more recognized by markets past the National Party Congress. And last but not least, you have seen pretty big evidence that, you know, natural gas and energy prices can swing both ways. So a lot of that is in the price. The main risk here is, the main issue here for the dollar is that if you think about the balance of risks, it's still skewed to the upside. And what I'm saying by this is, you know, warm weather can become cold weather next month and natural gas prices can spike. Intervention is now stabilizing Asian currencies, but that may actually prove to be an entry point for investors in the future if policies remain geared towards soft growth. And we could see quite a few more months where inflation will go.
Sorry, Themos. So what does that mean for example, some of the emerging markets that you follow? If you look at some of that denominated in emerging markets, maybe countries that, you know, have upcoming elections that are large, you know who I'm talking about, what does that mean for them going forward and their debt sustainability?
I think that you're hitting the nail in the head here. In this environment where, you know, the majority of the dollar move is behind us, but there's still some upside risk for the dollar, etc., one needs to understand that now the world is set up differently for different countries. There are some parts of the emerging universe that will benefit from some evidence of peaking in policy rates in the U.S. These are the high carry currencies with good balance sheets, Brazil, Mex. They tend to benefit when rates volatility peaks. Then there are countries that have a very high sensitivity to high rates, financial conditions, etc. So, you know, the fact that global rates will stay high is a bad thing for them. This usually touches on countries that have high financing requirements. The Andeans, Chile and Colombia probably stay under pressure. India and Indonesia probably still on the negative end. And then the tiebreaker of it all, both for G10 and EM, is how much weaker the Chinese currency will go and how big of an influence that will have both on regional currencies, EMs and the euro. And there's still probably on the balance a little bit more downside there to complete the picture.
Great, Themos, thank you. Themos Theotakis, our global head of FX research at Barclays. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Europe suddenly has more gas than it can use. Starved of Russian imports, the region has filled storage facilities with LNG cargoes from around the world, combined with an unusually warm weather that's seen gas prices fall back sharply to less than a third of their summer peak. Bloomberg's weather model suggests European temperatures are set to stay milder than usual, and that will be well into November. Now, Australia's headline inflation has surged to a 32-year high in the third quarter, with consumer prices up 7.3%. Well, that was on a year ago. It came that day after the government warned of mounting debt and deficit deficit in the years ahead. The RBA thinks inflation will peak just under 8% by the end of the year. And Adidas intends to sell existing Yeezy product designs using its own branding after ending its partnership with the rapper and designer Ye, formerly known as Kanye West. The company expects a €250 million hit to earnings after terminating its relationship with the star over a string of controversial social media comments. Rishi Sunak has named an experienced cabinet to lead the UK through what he calls a profound economic crisis. Jeremy Hunt is remaining as a Chancellor of the Exchequer, but Downing Street has not confirmed if he'll stick to delivering a fiscal update on the 31st of October. Suella Braverman is back in as Home Secretary just days after Liz Truss fired her over a national security breach. Global News 24 hours a day on air and on Bloomberg Cryptake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, some of the biggest U.S. stocks in tech tumble in after-hours trading following disappointing results from Alphabet and Microsoft. So we'll have plenty more on that next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
European aluminium is really suffering from the war. And we see that there is a paradox that a number of the producers has been self-sanctioning in terms of the Russian metal, while there are others that are buying the Russian metal and are gaining from the war in many ways. So we see that we are now calling for an action to sanction Russian metal.
Well, that was the chief executive of Norsk Hydro speaking earlier to Bloomberg, calling for sanctions on Russian metal. Now, U.S. tech stocks tumbled in after-hours trading after some of the industry's biggest companies reported disappointing results. Now, Microsoft posted its weakest quarterly sales growth in 5 years, while Alphabet sales fell short of expectations. Now, Chip Bellwether, Texas Instruments, also gave a weaker forecast. Well, joining us now is Matt Bloxham from Bloomberg Intelligence. Matt, great to have you on the program, as always. So first of all, what were your key takeaways? It wasn't great.
No, it wasn't.
But did it warrant that much of a sell-off in after hours?
Well, it's always tricky, isn't it, with where people's expectations are really fixed. I mean, I think there were three things here. One, obviously, there's the currency headwinds, about 5 percentage points this quarter, a bit stronger than last quarter, but then clearer slowdown in advertising spending hitting Google, but also some signs that PC and cloud demand is also slowing too. I think particularly what Microsoft said about Q4 in terms of slower Azure growth, which is their main cloud platform.
So, Matt, is it really Google? Is it the big one because it gives us more of an indication of future earnings performance for all tech stocks?
Yeah, I think so. Yeah, to a degree, because I mean they're clearly one of the bellwethers along with Meta for the advertising market, and I think clearly if corporates are spending less on advertising, it tells you that they're tightening their belts generally. So I think that was a kind of really important signal that we are finally starting to see signs of the economic slowdown hitting corporates at large, and beyond that, obviously that they have a growing cloud business. Still growing well, but it's not making money yet, and so I think there's perhaps some frustration there that how big does this thing have to get before it makes some money? It's generating $7 billion, also maybe more of a kind of revenue quarter. It's kind of a big business, and also YouTube was slower, and I think that points to the structural pressures in the ad market with TikTok coming in and really pressuring the established players in that marketplace.
So they're all trying to rival TikTok.
Rival it and kind of catch up on it, kind of replicate what TikTok's doing to their own businesses.
Yeah, that doesn't really work, right? Unless you have the younger crowd.
No, it doesn't. Yeah, I can think TikTok's got such a strong lead. Obviously, the other area that they're trying to kind of tap into with YouTube is the whole connected TV push, and I think people are expecting to see some better traction there. But with clients cutting budgets, there's less money to go around.
Talk to me a little bit about Elon Musk and Twitter. So he thinks that by this Friday, he's got it, and then there was all this rumor about cutting 75% of the workforce.
Yeah, that's right. So obviously, first of all, is the deal going to happen by Friday? It's kind of certainly leaning more that way, and the bid spread has narrowed. He had a call apparently yesterday with his bankers to line up the debt, so that's really important. I think the headcount cuts. I mean, I think Alex Webb was talking about this last week, and when he was in San Fran a month or two ago, definitely the word on the street was that Twitter can easily cope with 60 or 70% less heads. So I think certainly if Elon does do the deal, he's going to kind of significantly reimagine what Twitter is as a business.
Matt, thanks so much. As always, Matt Bloxham there. We're looking at tech from Bloomberg Intelligence. Coming up, earnings season, full swing. In case you hadn't noticed, major European banks reported today. So we'll discuss how things are looking with Mike Scott. He's lead portfolio manager for high yield and credit opportunities at Man Group. This is Bloomberg.
Now they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Earnings in the spotlight. Deutsche Bank and UniCredit lift their revenue outlooks as higher rates boost trading. For Barclays, it's a miss. Big tech battered Microsoft, Alphabet, and Texas Instruments tumble after hours as weak earnings hit some of the world's top companies. Plus, the new Prime Minister, Rishi Sunak, appoints his cabinet as the Times reports he may delay next week's fiscal statement. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So earnings season picking up pace with inflation looming over quarterly results. Let's discuss all of this with Mike Scott. He is lead portfolio manager for high yield and credit opportunities at Man Group. It's, of course, the world's largest publicly traded hedge fund firm. So, Michael, thank you so much for joining us. Now, first of all, when you look at banks in general, so this is your specialty, right? You do high credit. When you look at the sustainability of some of this credit in banks overall, are we in a better place than we were 10 years ago?
I would say we're certainly in a better place from a credit perspective. Clearly, post the GFC, banks have really gone through a cleansing from improving the balance sheet metrics from solvency, etc. So, from a credit perspective, we're actually less concerned about the banking system going into what we see as a global downturn. But nonetheless, we do think that earnings will likely become pressured as we go into 23 from rising provisions.
I mean, 3 weeks ago, it's pretty scary what happened on the gilt market. And we were hearing about some huge margin calls with some operators also potentially going bust if the Bank of England hadn't intervened.
Well, I think that was a very interesting period. And I don't think it was necessarily just solely a UK problem. I think what it does highlight is the hidden leverage that exists within the financial system, not least just in the banking system, but also in the shadow banking system. I think we've seen numbers where our total assets in the pension industry in the UK are 500 billion, but actually there's 1.5 trillion of invested assets. And clearly from these derivative contracts, when there was a significant margin calls from the rising gilt yields, it's had a very clear impact and devastating impact for some of these pensions.
But Mike, so as we go into QT, I mean, this is an extremely uncertain time because you see parts of the markets, part of the banking, and we mentioned shadow banking during the break, where people have been swimming naked, right? Which is not the same business if your leverage is 1%, if suddenly interest rates go to 5%. Where do you see the fault lines?
Absolutely. So from a credit perspective, so we work in some investment grade and certainly is always at the bleeding edge, I would say, of a downturn and a rising interest rate environment. We certainly see defaults picking up. And I think what is interesting actually about this cycle is actually from a high yield perspective, high yield bond market perspective, companies are coming into this from actually a position of strength. They have spent the last 2 years terming out their debt. which has actually meant that default pressures we think could be, will certainly increase, but certainly won't be comparable to what we saw in the GFC.
But this is what, 20% of possible defaults, or is that too high?
I think that's very high. I think in a bearish case, we could see high single digit. I think in our base case, we're likely to see mid single digit. But nonetheless, we are coming from very low levels currently. And as we go into a broader global downturn, that is very much going to be a feature of 2023.
I mean, how difficult at this point is it to see the banks that are in more of a precarious situation than others? Again, I mean, we didn't see any margin calls, for example, on some of the big commodity players or hedge funds that maybe were expecting at the time of the invasion of Ukraine. But then you could have a whole other set of problems.
So I think from a financial side of things, as I say, from a credit perspective, we do see the banking sector in a much better state than it was 10 years ago. So from where we do have concerns, however, in credit markets is very much more in the loan space.
Right.
So where companies...
Mortgages?
So as in leverage loans.
Okay.
So these are a close cousin, I would say, to the high-yield bond market. And many of these businesses are unhedged from an interest rates perspective. Just to give you a stats, 30% of businesses in the leveraged loan market in Europe are hedged for interest rate rises. So that's 70% of the market is unhedged. And that was before going into a more difficult demand backdrop. So we do see default rates being actually more problematic in the leverage loan market than we do in the high-yield bond market.
And this is what, for the UK? Or is there a difference between UK and Europe? Or do they have very similar patterns?
They have quite similar patterns insofar as both economies, or major economies, have felt a very strong terms of trade shock. And that has been driven by the energy crisis. And as you say, the war in Ukraine has been a big driver of that. I would say that from a European UK perspective, the market is already pricing in to some degree quite a dire backdrop for 2023. I think we see actually moving over to the US, that's not the case. Right. So actually the US market still needs to price in what we expect to be a recessionary type backdrop for the US as well in 2023.
So Mike, when you look at your charts and when you look at some of the high yield credit, where do you see the signals of distress coming?
I think they have been building already, and the initial sectors to really to show credit distress already have been primarily very affected by interest rate rises. So the property sector, for instance, consumer durables, etc. But I think as we look into 2023, this is certainly going to morph into more traditional cyclicals in the way of industrials, cap goods, basics, automotive OEMs, and suppliers. But as I say, I do think that from our perspective, whilst default rates are going to certainly increase in the high-yield bond market, they may not be as we don't expect them to be as severe as they were in the prior recessionary backdrop.
Mike, what's your highest conviction call?
So our highest conviction call currently, and where we're paid for the risk that we take, we think non-cyclical cash-generative businesses with very strong pricing power. So we like areas of healthcare, we like areas of consumer staples in particular. Often these businesses have very strong asset backing as well. So from a creditor perspective, we not only get fairly resilient cash flows, but we also get security from the assets that back those credits as well.
Mike, thank you so much for coming on TV today. Mike Scott, their lead portfolio manager for high yield and credit opportunities at Man GLG. Now, coming up, we'll recap what we've heard so far from European bank earnings. We also look at market reaction. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacroix here in London. Now, returning to one of the biggest stories this morning, Deutsche Bank says it may exceed its full-year revenue target after beating third-quarter earnings estimate. The chief financial officer, James Moltke, spoke to Danny Berger a short time ago about those strong earnings.
What we're focused on is having a portfolio of businesses that can sort of create some earnings stability throughout the cycle. And you're seeing that now with very strong FICC and relatively weak or very weak origination advisory. I think that will sort of change again, or there'll be a rotation in 2023 as volatility begins to stabilize. You know, the markets now, I think, have a clearer view of terminal rates for interest. I think there'll be a settling once we have visibility into the path of both interest rates and the economy.
So as that deal flow then comes back 2023?
And I think at that point, the deal flow begins to come back. In a sense, macro shifting back to micro at a point in time, at which point origination advisory and for example, the credit business within FICC markets would likely start to come back.
When do you see that happening? When in 2023?
If I had to guess, it would be the second half of next year. So I think there's still some time to go on this more volatile environment. As you say, it's important as well that the businesses that we have that have large deposit books and who are based on growing loans, so corporate bank and private bank, they're now seeing real momentum, benefiting from interest rates, but also client activity.
But when it comes to those riskier loans, the leveraged loans, is now the time, until the environment normalizes, to get low to the ground, to cut back on risk?
Well, look, our commitment pipeline at this point is down to only about $2 billion, and we think we've marked that now appropriately to the current conditions. It's a feature of the leveraged debt capital markets that there'll be a backup every once in a while when financial market conditions change. The banks work through their pipelines, and then as investors and also issuers find sort of a more accommodative environment and more predictability in terms of pricing, the market reopens. And you're beginning to see that already in the third quarter.
Deutsche Bank Chief Financial Officer James Moltke speaking there to our own Danny Berger. Well, Danny's in Frankfurt for us. So, Danny, great interview. Can you walk us through some of the numbers from Deutsche Bank?
Yeah, Deutsche Bank's story really is one that reflects the entirety of the banking sector we've seen so far this year. So the volatility means that trading numbers were strong. FICC revenue, that was really strong, easily beating most of Wall Street. Interest rates, those also giving them a lift. Net interest income was higher as well. But similarly, like the rest of the banking sector, advisory and origination was very weak, perhaps weaker at Deutsche Bank than a lot of other banks. Of course, that business is a bit smaller than we see elsewhere, but that fell 85%. You heard in that interview there, he does think that it will come back in the third quarter, or rather by mid next year. But still is painful and costs are higher. So those two combined might be part of the reason we're seeing some of the weakness in shares this morning.
So the business may still be strong, Danny. Deutsche Bank also operating in a difficult economy. What did he tell you about that?
Yeah, he sees a 2% recession in Germany next year, but it's not just that. It is a permanent shift that Germany is going to have to go through. It is, he called it a deep restructuring that will last many years. It's changing energy policy. It's changing trade with China. It's changing exports. And then there are also risks. He doesn't see them in the banking system, but he does see them spread out through these financial markets that regulators perhaps have less leverage over. He talked to me about that. Take a listen.
The market is uncertain how much of the risks and where has gone into the non-bank sector, the less regulated sectors, and so is there sort of, there going to be shoes to drop in that area? That's probably the greatest degree of focus. And then also what we sometimes call cross-asset risk, so ways in which asset markets talk to each other that models sometimes don't predict. Those are two areas that we're looking for and looking out for potential risks and surprises.
Yep. So, Danny, Deutsche Bank CFO, they're also telling you some advice. I love this so much for Credit Suisse. I'm sure they loved it.
Yeah, and look, it felt right to ask Francine because, of course, it's the biggest story in banking at the moment, but also Deutsche Bank more than 3 years ago had to go through the same process of doing a restructuring, a large one, in order to get that investor confidence back. Von Moltke said it came down to being decisive, to having discipline execution. And so I said, okay, give me exactly what is your advice to your peer going through something similar? He said, they've got to be patient. They need to have their eye on literally every detail, and you have to bring your people along. Of course, Francine, that people question, retaining talent, we know that's been a bit of a stick in the mud for Credit Suisse.
Yeah, so difficult as people leave the firm. Thank you so much. Our Danny Berger there, great interview with the Chief Financial Officer of Deutsche Bank. Now, as we've been hearing, a big week for earnings banks, well, bank earnings. Santander, Barclays also reporting. We also had UniCredit. So let's get our resident expert from Bloomberg Intelligence on the banks. He is Jonathan Tice. Jonathan, great to have you today to really try and unpack like the millions, I mean, maybe not millions, but the dozens of banks we're getting this week. Who's strongest?
Well, I mean, we've seen very good revenue across the board. I think if you look at share price reactions, for example, yesterday HSBC, a little bit harsh, CFO did leave, but a very strong set of numbers. Look at Santander today, a very comfortable beat on revenue, but a small cost miss. So when you say who's strongest, everybody's getting the uplift from net interest income. One thing is key, you've got to do a really good job on costs, because the market is looking through the net interest income uplift at the moment. They're looking at what management are doing with costs. They're also looking at guidance on bad debt and provisioning. And again, HSBC was a little ahead of consensus there.
But are you surprised that we haven't seen a bit, distress in that yet? So either loans, but also mortgages, or does that come early next year?
It's too early to see it in the numbers, but because of IFRS 9, which is the way they can account for it, we're going to begin to see banks taking charges ahead of time. They can do things like management overlays, post-model adjustments. This quarter and a lot more next quarter, we're expecting to see banks build the buffers, because also you lower your ROE. You don't want the regulators and the Bank of England and the ECB looking at revenues and saying, hang on a sec, you guys are making 15% ROE just because rates are going up. Here comes a new windfall tax. So provisioning will be used as well, I think, by the banks to try and stave off measures from regulators.
So are you expecting a lot more of those provisions to be, I mean, when does it hit? And is it more UK banks compared to European banks?
I think probably more UK at the moment. And I think Lloyds and Barclays today, Lloyds and NatWest will be talking about this. The bigger banks, BNP, for example, has a very sensible policy. They kind of smoothed it anyway, so we won't see any negative surprises there. It's the Santanders of this world with the big EM businesses. That's where if you do get a move, they move very, very quickly.
What did you make of Barclays?
Decent numbers. They're doing well on costs. FIC was decent. I think all in all, they're doing a very good job. But as ever with wholesale funded banks, the market doesn't really care, and they look through the trading. I mean, FIC, 63% growth in dollars was huge, and they're a dollar beneficiary. You look at HSBC yesterday, the dollar has hurt them quite badly because of their UK cost base. So doing well, but as ever, the market sort of looks through it.
So what does the market want to know? Like the business model longer term, right? Which sometimes gets muddled in the earnings quarterly results.
Yeah, I mean, sustainability, as the CFO of Deutsche said, the question we have is how quickly does FIC stabilise? Equities isn't doing great, and fees, Deutsche was of the biggest fall, but they've fallen off a cliff. Remember last year it was massive fees, terrible FIC and okay equities. I think FIC will continue to do well through into early next year. how quickly does fees bounce back, and how brutal will they be on costs? Because it is the fee pool from the investment bank that pays the bonuses.
Talking about brutal, what do you do with Credit Suisse?
Well, it will be interesting. I mean, it's all about how many disposals they make. Because if they don't manage to sell enough at the right price, they do need a capital raise. Clearly that's dilutive. They don't want the regulator to step in and say, you need a capital raise. So it's about the disposals for them.
I mean, is there really talk, and I hear this, and I kind of, a lot of times push back, it's not a solvency problem. Is it a problem? We're not talking about this bank going under.
No. But remember, though, that what we learned in 2008-09, it's not about capital, it's about liquidity. And as and when clients stop, interbank market closes, we start worrying about these things. So no, it isn't solvency, but they do need to shore up capital.
Jonathan, thank you so much. As always, Jonathan Tice there on the banks from Bloomberg Intelligence. Now, coming up, we'll take a look at what is driving the markets today. That's coming up next, and this is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China. But African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Zara parent company Inditex has agreed to sell its business in Russia to the Middle Eastern Daher Group. The deal will preserve a substantial number of jobs in Russia, with the company picking up most of the store rental contracts. In June, Inditex, the world's biggest clothing retailer, said it was taking a €260 million provision for shutting operations in Russia and in Ukraine. General Motors beat Wall Street's consensus third-quarter profit estimate estimates on record revenue, adjusted profit of $2.25 a share, surpassing analysts' projection of $1.89. GM also maintained its full-year profit thanks to strong sales of its luxury Cadillac SUVs and largest trucks.
We're seeing still very strong demand for our products. We're seeing strong average transaction pricing that we continue to be able to build on. And so, we are starting to see inventory build just a little bit, but well below levels that were in the past. So overall, we're still seeing a very strong consumer for our products.
And Adidas intends to sell existing Yeezy product designs using its own branding after ending its partnership with the rapper and designer Ye, formerly known as Kanye West. The company expects a €250 million hit to earnings after terminating its relationship with the star over a string of controversial social media comments. Intel's self-driving technology company Mobileye has raised $861 million in one of the biggest U.S. IPOs of the year. Shares priced above the marketed range. At the IPO price, the company has a market value of more than $16 billion. Intel will still control Mobileye. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now let's get more on what's moving markets in the second hour of equity trading with Bloomberg's Joe Easton. Joe, thank you for joining us. We look at the banks, we look at technology.
Yeah, so obviously a big earnings day, as you mentioned, the banks taking a lot of focus. Obviously some individual stories going on there with Deutsche Bank, Santander as well. But they're all really facing the same kind of dynamics at the moment. Higher central bank rates is by far the most important thing for any bank at the moment. It's really a big kind of payday for them. But obviously the downside is the potential for a slowdown in loans, particularly in the UK with the mortgage market crisis, consumer credit cards, that kind of thing. So it's kind of a strange situation where banks are getting a big boost at the moment from the rising rates, but are also very wary that they could see a drop down in their loans coming through.
Joe, what do we do with technology?
So
it wasn't great.
No, it's. I think it's looking pretty scary, actually. Some of the numbers that you're seeing, some of the declines that we've seen in, Google, Microsoft, pre-market, not looking great at all. Kind of makes sense, given that they're so entrenched in the global economy and have so many suppliers and other businesses that are dependent on them. But then you have to think, how much further can these stocks go? And if the economy starts to, bottom out into early next year, central banks then have to rethink the policy outlook, and you'd potentially see a lowering of the discount rates, and those stocks could look cheap again. So I think there's obviously a lot going on.
And then, Joe, tomorrow, ECB. So this is a big one. And then we had actually the new Italian Prime Minister going after the ECB in her first speech yesterday.
Yep, so ECB tomorrow, obviously most people looking for a 75 basis point hike, but I think there's a lot of division in the central bank there. You mentioned Italy. If you're Italy, do you really want to start hiking rates really aggressively at the moment? I don't think so. The same with Spain. Germany, yes. So there's some division, and with the euro, the cheap level where the euro is, that will start importing inflation more into the eurozone as the end of the year comes in, and I think that could even put more pressure on some of the more hawkish members to hike, but the other periphery members will be less keen to do so.
Okay, you have stocks to watch, or you were looking at the stocks, and we're cleaning our houses less.
Yeah, that's coming from Reckitt in the UK. So Reckitt obviously make Lysol, a couple of other big brands, but they say that the hygiene business is dropping. Sales aren't as good as expected. We're all not cleaning as much as we were during the pandemic. We didn't have much else to do. We were all cleaning, and now we're not doing so much of that.
Oh, come on, Joe. People, clean your houses. This is like our word of advice for Wednesday, right? I mean, I should start cleaning my house more.
Yeah, Reckitt will want you to do so.
Yeah, guilty as charged. Joe, thank you so much. Joe Easton there with the stocks to watch as well. Bloomberg Surveillance Early Edition continues in the next hour. Pretty good duck. Kaylee Lyons in New York, or Anna Edwards here in London, and this is Bloomberg.
went back and looked, and very few secretaries of state in the last 100 years, or maybe ever, have really gone back into government. So why did you want to come back into government for any issue when you've got 8 grandchildren, you've got 2 daughters, you've got wonderful family? Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple. We're not in a good track right now. The world is not serious enough about reducing our emissions fast enough, David. And the result is that the planet is going to continue to evolve in reaction to what we human beings are doing to it, mostly through fossil fuels. Most of the emissions that are going up nowadays into the atmosphere and are creating this increased level of energy that comes from the ocean, goes into the storms, the floods, the rain. All of it is explainable, and it's all linked to the changes we are creating on the planet. So it's very simple. I wanted to come in because I think we have a real chance now to make something happen, and I think Glasgow was a major step forward in the effort to do that.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The risk of a U.S. recession is uncomfortably high. I don't like it where it is. I don't think it's a done deal. I don't think it's 100%.
On the persistence, the high level and persistence of inflation, the rate environment, and now with a recession call both in the U.S. and Europe, the recession, we believe, will be in and around 2% next year in GDP terms relative to 22.
We're prepared to a more extreme scenario, which would see a recession on average at more than 3% next year.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Tech's big day turns into a bust. Microsoft, Alphabet, and Texas Instruments all come out with disappointing results. Deutsche Bank delivers. Fixed income trading revenue soars while rising interest rates boost income from lending. And it's Rishi Sunak's first full day in office. Will his government stick to the date for the next week? For next week's fiscal statement, a cabinet official suggests it could be delayed. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lines and Kriti Gupta in New York. Matt Miller is off today. And Kaylee, it seems we're all suffering a little bit of a tech hangover, certainly if you look at European markets and US futures. But before that, we still had some positivity in Asia.
Yeah, Asia didn't really feel that downward drag from the disappointing U.S. tech earnings after the bell yesterday. In fact, we saw a continued recovery from what was brutal selling on Monday. Of course, that recovery started in the Tuesday session and it continued on this Wednesday. Overall, the MSCI Asia Pacific Index higher by about 1.3% on the day, with Chinese stocks up about 0.8%. One thing boosting sentiment is a vow from the PBOC and China's Foreign Exchange Authority saying that they will support the development of stock and bond markets and the Chinese yuan will remain, quote, relatively stable. And on the subject of the yuan, the offshore yuan strengthening against the U.S. dollar, coming off of record lows, actually stronger by 1.75% on the day. So really big move. We're now back down at the 718.58 level or so. So definitely something to watch. Although keep in mind that literally everything in Asia and G10 is weaker, or stronger rather, against a weaker U.S. dollar on the day. And of course, in the bond market, we have seen some real buying coming in, yields moving sharply lower, a move that started with with the Treasury market yesterday, but that continued overnight. In Australia, for example, the 10-year yield down nearly 16 basis points on the day to just shy of 392, Greedy.
Yeah, Kaylee, that tech hangover that maybe escaped Asia definitely has not escaped the United States. What I will say, though, is some of the gains or some of the losses that you did see earlier in the session, well, some of those have been paired. Check it out. The S&P 500 futures only down 0.5%. Earlier in the session, you did actually see them lower by almost 1%. So perhaps a little bit of readjustment post those tech earnings. Take a look at the 10-year yield, though, because as you pointed out, the bond market is catching a bid around the world, it seems. 404 on the 10-year yield, down about 6 basis points, but in a volatility kind of induced context, it's still not as big of this move that we've been seeing. Remember, moves of 15, 20 basis points in one day. Do we see that again today, perhaps as maybe a little bit panic on the macro sphere? Speaking of, as we see those yields come lower, the dollar follows not too far behind, down about 0.9%. What's interesting, though, is that even with the weaker dollar, you're not seeing a massive move higher in commodities. In fact, Brent crude only up about 0.2%, trading with a 93 handle, Anna. Whether that continues remains to be seen.
Yeah, we've seen quite a bit of volatility, actually, in that oil price just this morning, Chrissy. Let's have a look at the European picture, and it looks pretty mixed, actually, and we're caught between a number of different narratives here. We've got the positivity, perhaps, coming from a lower, at the margin, very recent lower yield environment. That seems to be the most recent developing story attached to weaker data out of the US. That might leave room for risk assets to rally. But on the other hand, the tech story is not positive, and we've got a mixed picture for earnings here in Europe as well, with recession fears on the horizon. So all of that playing into a mixed story for Europe. Here's a few of the businesses reporting today that I picked out to talk about. Santander, the Spanish bank, down by 3.4%. On the map, you can see that Spain was weak, and partly it's to do with Santander. They actually delivered numbers that showed that, just like many of the other banks in Europe, they're in a bit of a sweet spot where the net interest margin is getting a boost from the higher rates environment, and we haven't really seen too many questions about asset quality deterioration just yet, although there's a fear that's coming. Costs a bit of an issue at Santander, according to some of the analysts. UniCredit, this stock up by 4%, showing some of the same dynamics I described in terms of the banking sector and net interest margins, and also pleasing the market, it would seem, with some of the guidance that they've renewed and improved for another quarter. Heineken is down by 10% today. This is the beer maker, of course, and their trading volumes, the amount of beer they sold actually went up, but not as much as had been anticipated, and cost, once again, an issue over at Heineken. Here's the pound, and here we are seeing a little bit of response to what's going on in fixed income and a reassessment, perhaps, or a reevaluation of just how much hiking we get from the Federal Reserve and other central banks. So the pound at 116 right now, up by more than 1%. So real recovery we're seeing here in the pound, but it is a dollar weakness story, and it is because at the margin, investors, Kaylee, increasingly questioning just how much hiking and for how long we're going to get from the Federal Reserve as we see that data in the US deteriorate.
Yep, which is why the dollar is so much weaker on the day, and we are seeing a bid coming into the bond market. We will keep on top of those cross-asset moves, but first we want to zero in on tech stocks, which, as we said, are dragging on risk sentiment this morning. In pre-market trading, you have Microsoft and Alphabet, each down in the ballpark of 6% after disappointing results. For Microsoft, it posted its weakest quarterly sales growth in 5 years. Alphabet sales fell short of expectations as well. Alex Webb of Bloomberg Quick Take is joining us now for more. So, Alex, sentiment wasn't overly bullish going into these results, and yet somehow the bar was still too high. What does this tell us?
Well, yes, as you say quite rightly, I think the bar was quite low, and anything that suggested even the slightest glimmer of upside was likely to have been taken well. There was very little upside. It probably oughtn't have been a surprise. We knew that a lot of the spending when it came to cloud computing, when it came to hardware, had been brought forward by the lockdowns as companies worked out how their employees were going to work from home. But we also saw then that the impact of inflation on consumer spending has therefore affected companies' ability to advertise, and so that has a massively detrimental effect on Google, which is the single biggest advertising technology company in the world. We'd seen an impact on the smaller guys. The fact that it is now hitting Google as well is significant.
But then we also have it hitting the business investment side as well with Microsoft. Talk to us a little bit about the impact, or at least the read-through in some of those Azure numbers.
Yeah, so Azure is, we should qualify this by saying that is the outlook for Azure, which is Microsoft's cloud computing business, that has really roiled the market a little bit, with obviously Microsoft now appearing to trade down. but the commentary was that growth will be 5% slower than in the previous quarter. So if you read through those numbers, it still implies 37% growth compared to the 42%. So it is still a growing business. It's just clearly not as fast as it used to be. And as I was saying before, it is likely because people front-loaded a lot of their spending, their onboarding onto that platform during the lockdowns. There isn't that much more new spending as a consequence.
Alex, finally, we see a ripple effect from Alphabet's results in the week, advertising trends there through other ad-sensitive stocks like Meta, for example. It's not touching Twitter, though. Twitter is actually higher by about 0.4%, $53 a share. That has everything to do with Elon Musk saying he plans to close the deal by Friday. What's the likelihood that really happens?
Well, it's a lot of the reporting that our colleagues have made suggests that bankers are working very hard to do so. The only obvious fly in the ointment would appear to be some regulatory pushback. It seems as though that maybe the Biden administration is having a look at the deal in the context of some of the comments that Elon Musk has made pertaining to the war in Ukraine, but we haven't yet had anything official on that nature. So as things stand, as implied by the stock price, there is a lot of confidence in this deal happening by the end of the week. Again, I will qualify that by saying the stock has never traded in line with the $54.20. So there's always a little bit of wiggle room.
A little bit of execution risk still in that price then. Alex, thanks so much. Alex Webb of Bloomberg Quick Take with the latest on the news flow coming through thick and fast from the tech sector. More on that later. It's also a busy week for European bank earnings. Deutsche Bank says it may exceed its full-year revenue target after beating third quarter earnings estimates. But the CFO, James van Moltke, is still looking for potential risks in the current macro backdrop. He spoke with Bloomberg's Danny Berger earlier.
The market is uncertain how much of the risks and where has gone into the non-bank sector, the less regulated sectors, and so is there sort of there going to be shoes to drop in that area? That's probably the greatest degree of focus, and then also what we sometimes call cross-asset risk. So ways in which asset markets talk to each other that models sometimes don't predict. Those are two areas that we're looking for and looking out for potential risks and surprises.
Yep. James van Moltke there. Bloomberg's Danny Berger joins us now from Frankfurt with more. Danny, trading comes in strong. Deals, though, are bad and bad across the sector. Where does Deutsche Bank go from here?
Well, Deutsche Bank von Moltke specifically, when I asked him about that business mix, he did think it would normalize. He said, look, deal flow, deal activity, for us, that's going to come back. For the markets, it's going to come back by the second half of next year, once interest rates normalize, or at least we get a grip on that environment. But in the meantime, this was their worst quarter for deals and origination since the financial crisis, dropping 85% year over year. Now, to be clear, FICC was really strong. Net interest income gave them a boost as well, thanks to higher rates. So overall, their earnings net revenue looks strong. But yes, that is definitely a problem for them. And also a problem was higher than expected costs, rather. Obviously, higher earnings is not a problem, but higher than expected cost was a problem. And that's potentially why we see shares lower today.
On the subject of problems, other banks have their fair share of them, including Credit Suisse. And James von Moltke also had some advice to Credit Suisse for their restructuring. What was his message?
Yeah, Kaylee, you know I had to ask this because look, at the end of the day, Deutsche Bank went through the same thing more than 3 years ago. They started their mass restructuring, trying to get investor confidence back, and by most measures, if not all, they have. So he said, look, the key to that success, it's about being very decisive, taking action, sticking to it. And then I said, okay, then what's your advice to Credit Suisse specifically? And he said for them that they need to be patient, very, very focused on literally every detail, and they need to bring their people along. Of course, we know talent retainment at Credit Suisse, that certainly has been an issue for them.
Danny, thanks so much. Bloomberg's Danny Berger from Frankfurt with the latest on the Deutsche Bank story. Let's get to UK politics. UK Prime Minister Rishi Sunak named an experienced cabinet to lead the UK through what he called a profound economic crisis. He confirmed that Jeremy Hunt will remain Chancellor of the Exchequer, but according to Foreign Secretary James Cleverly, Sunak may delay an economic plan scheduled for next week and watched closely by the markets. Bloomberg's Lizzie Burden joins us now from Westminster. Lizzie, what do we know then about the October 31st date that we have marked in our diaries, marked in our calendars as important for a fiscal statement in the UK?
Well, Rishi Sunak's been meeting his new cabinet for the first time this morning, including the returned Chancellor Jeremy Hunt. So we'll be expecting confirmation later today. James Cleverly, of course, the Foreign Secretary, hinting at a delay. And of course, it wouldn't be surprising if Rishi Sunak wanted to delay this, because it's going to be a premiership-defining fiscal statement. Jeremy Hunt has said himself he's going to have to take eye-wateringly difficult decisions, although Hunt has hinted that he personally wouldn't want to delay the fiscal statement so that the Bank of England can take account of it, and so that potentially there could be a smaller rate hike from the Bank of England this time. The good news, though, is that former BOE and OBR official Charlie Bean has said that the fiscal black hole that Jeremy Hunt's going to have to shrink is now smaller. It's now £30 billion rather than £40 billion by his estimation, because of Rishi Sunak's effect on calming the markets.
Well, Rishi Sunak has also appeared to have kept his friends fairly close, his enemies even closer when it comes to his cabinet appointments. What does that say about his administration?
Well, it's been a firm nod to party unity. He's kept the three holders of the great offices of state in the same positions they were last week. A bit of a change in the middle for Suella Braverman, the Home Secretary, but she is the most controversial reappointment because she was sacked only 6 days ago for breaching the ministerial code. Yesterday, Rishi Sunak was professing to be bringing back integrity to Number 10, and yet Braverman is back, and it seems to have been because of the deals Sunak had to make with the Tory right to get into Number 10. So you can expect Keir Starmer, the opposition leader, to raise that point at Prime Minister's questions in his first face-off as Prime Minister with Rishi Sunak later. But it's also meant that Sunak's key allies have had to have rewards lower down the pecking order. So, for example, Mel Stride, his chief campaign officer, becomes Work and Pension Secretary, although that is an important role at this moment, given the debate over whether benefits should rise in line with inflation. He thinks they should. But it also means that Penny Mordaunt hasn't had a promotion. She didn't look very happy coming out of Number 10 yesterday, but perhaps that's her punishment for only conceding to Rishi Sunak at the very last minute. But really, the need for party unity has meant that Rishi Sunak, as you say, has had to keep his enemies closer than perhaps he'd have liked to.
All right, Bloomberg's Lizzie Burden, thank you so much for your terrific reporting from Westminster. Let's get back to some of the earnings stories we need to pay attention to this morning, though, and take a look at some stocks moving in pre-market trading here in the U.S. One of the disappointing tech results out after the bell yesterday, in addition to the big guys, Microsoft and Alphabet, was Texas Instrument. This company makes chips for everything from home appliances to missiles, and its quarterly forecast came up short of expectations. So that suggests that the chip slump is expanding beyond just smartphones and computing. As a result, that stock is down about 4.6% before the bell. It is also a downward move for Spotify after its results. It said profit margins may narrow because of higher programming costs, and as a result, it may need to raise prices here in the U.S. Interestingly, the company also talked about a slowdown in ad spending, so that echoes what we heard from Google overnight as well. Spotify down about 4.9%, and it's an even bigger plunge for Skechers, the shoemaking company that sells a bunch of sneakers. It missed expectations for its forecast on both the top and bottom line, and as a result, that stock is down 13.5% before the bell, Anna.
Okay, coming up on the program then, Kaylee, we will be in Riyadh. The Future Investment Institute event is taking place in Riyadh in Saudi Arabia. An exclusive conversation will bring that to you with Saudi Arabia's Minister of Finance. Plus, the world's biggest source of clean energy is evaporating fast. Read more of today's big take story all about hydropower's climate nightmare on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg's early edition. I'm Kriti Gupta alongside Anna Edwards and Kaylee Lyons in New York. Matt Miller is off today. I really want to dive in here with a terminal chart that really caught my eye about housing prices. This is enormous because this actually moved the market yesterday through the bond market, ripple effect into the stock market. For our radio audience, stick with me. Basically, we're looking at S&P Core Logic Case-Shiller data from 20 cities. The housing prices around some of these major countries actually dropping quite a bit, the most, by the way, since 2009. At the same time, you see mortgage rates really rising quite quickly. The effect of the Federal Reserve and those massive hikes perhaps now actually having a more tangible effect on a housing market that's considered to be extremely tight, perhaps booming a little too fast. That slack in the housing market perhaps helping the case for a little bit of a Fed pivot. Once again, yesterday it fed into the bond market, which then in turn fed into the stock market. I want to bring in Ksenia Galushko, the Bloomberg Equities team leader, to hop in on this conversation because, Ksenia, to me, this feels like an early sign that perhaps equities do have a reason to rally if they see perhaps a less hawkish stance from the Federal Reserve. Do you agree?
That's right, yes. So housing prices are starting to finally calm down, and also consumer confidence is plunging in the U.S. And this is good news for inflation and the Fed's fight to lower it, obviously. So yes, perhaps the stock market can start pricing in a potential pivot, but I think the Fed's comments so far have been very hawkish. They are reiterating that they're going to keep raising rates. They're going to stay hawkish for a while until they really see inflation peaking and starting to fall. And it might still take a couple of months or even a couple of quarters.
And Ksenia, that's really interesting then, isn't it? Because this potentially opens up a really big question and a really big opportunity, and the market's been wrong-footed by the thought of pivoting before and is very mindful of that. Where do we see the bottom as now for stocks? Because I know Goldman Sachs thinks we're not there yet.
Well, yes, so it depends on who you listen to. So Goldman Sachs indeed says that the U.S. stock market, despite the plunge that we've seen this year, has not priced in recession risks and a possible escalation in the Ukraine war or other geopolitical fears. But it seems like it's their worst-case scenario. So they do say that there's potentially 20 or 30% downside for the S&P 500 if the U.S. recession does come through. But at the same time, we've got Morgan Stanley's Michael Wilson saying that actually he forecasts a 15% bounce for the S&P 500 because it has bounced off that very important technical level of the 200-week moving average. So we could see upside from here.
Okay. Yeah. Is it still a bear market bounce or is it something more material? Ksenia, thank you very much. European stocks very much in limbo today. Ksenia Galushko joining us there with the latest on the markets. And for more insight and analysis into the markets, MLive Go is the function to use on your Bloomberg terminal. That's where you'll find the Markets Live blog. This is Bloomberg.
policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leanie Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Now, keeping you up to date with news from around the world, here's the first word. President Biden congratulated new British Prime Minister Rishi Sunak in a phone call yesterday. The two discussed the Russian invasion of Ukraine and challenges arising from China. The two also talked about the unresolved issue of the Irish border after Brexit. Last month's pickup in Chinese business activity wasn't enough to change the country's grim economic picture. The economy slowed in October as car and real estate sales weakened. Meanwhile, China's global trade and small business confidence contracted. All this according to Bloomberg's aggregate index of 8 early indicators. The European Union's executive arm will lay out plans to drastically cut pollution levels across the bloc today. That could potentially eliminate more than 70% of the 300,000 premature deaths annually over the next decade. Overhauling air pollution will bring the EU closer to guidelines laid out by the World Health Organization. And New York is still the most expensive rental market in the U.S., but Boston has now passed San Francisco for second place on the list. According to listing company Zumper, the median one-bedroom rent in New York is now $3,860. Boston rose almost 6% this month to $3,060, while San Francisco is $40 less. Coming up, we will go live to the Future Investment Institute event in Riyadh with an exclusive conversation with the Saudi Arabia Minister of Finance. That conversation is coming up next. This is Bloomberg.
nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start put your arms around encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Today on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Tech's big day turns into a bust. Microsoft, Alphabet, and Texas Instruments all come out with disappointing results. Deutsche Bank delivers. Fixed income trading revenue soars while rising interest rates boost income from lending. And it's Rishi Sunak's first full day in office. Will his government stick to the date for next week's fiscal statement? A cabinet official suggests it could be delayed. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. In fact, not Matt Miller, apologies. Kriti Gupta with us. Matt is off today. And Kriti, what do you see in the US futures picture? Because tech has dominated overnight, a sell-off in all things big tech as a result of some disappointing sales numbers.
Yeah, exactly. No worries, Anna. The resemblance is uncanny with me and Matt Miller. But to your point on futures,
like
that's
he
really,
was in the room.
Absolutely, he's still here in spirit. The truth about futures, though, is exactly what you said. You do have this macroeconomic fear that what Alphabet and what Microsoft is actually kind of indicating is the slowdown in a recession. Essentially, what the market is perhaps pricing in for about a year now. But also put this into some perspective from a technical level. You have had 2 days of gains that have been pretty fast and furious on the S&P 500. Some idea here that perhaps is the start of some sort of sustainable bull market rally, at least for those who are long on the equity market. Today, not so much. So a little bit of a pullback. Even in just the last 30 minutes, you've seen futures go from negative about 0.5%, now lower by about 0.8%. And it's not alone. The bond market also catching a bid here because you are seeing 10-year yield drop as well, about 4 basis points, 4.06 on the 10-year yield. And with those yields lower, the dollar follows. The Bloomberg Dollar Index down about 0.6%. But even as you see a weakening dollar, not all of it is translating into the commodity space. Remember, there is that inverse correlation given a lot of the commodity contracts are priced in dollars. Nevertheless, Brent crude hovering at about a 93 handle, Kaylee.
All right, Kriti, well, let's take a look at some of those moves that are really creating the drag in the broader equity market, and that comes from the mega cap tech companies that gave disappointing results last night, as Anna mentioned. One of them being Microsoft, reporting its slowest sales growth in 5 years, plus its forecast coming up short of expectations. It's being hit by the stronger dollar, although maybe that's not the case today, as well as slumping PC demand. So it is down about 5.9% right now, while Alphabet is down more than 6%. Of course, its advertising business as it relates to Google as well as YouTube being hit by a slowdown in ad spending with the softening macroeconomic environment. When a giant like Google gets hit, that's how you know it's really bad out there, and that is translating into other advertising reliant companies as well. Meta will be reporting after the bell today. Ahead of those results, it's down about 4% in sympathy with Alphabet. What's interesting is that Twitter also is one of those ad sensitive businesses. It is expected to report this morning, but the fundamentals don't really matter for that company because come Friday, Elon Musk says he will have closed his deal and taken the company private. And so that is why Twitter is higher by about 0.5% this morning. 53.03 is where we trade at the moment. So still not quite at that 54.20 deal price, but Anna, clearly the market is raising its expectations that is ultimately going to go through.
Yeah, you just have to watch the Elon Musk Twitter feed, I suppose, to get the news that matters when it comes to Twitter's stock right now. Kaylee, this is what we see for European stocks. The stocks 600 here in Europe, down by 0.2%. We do see some of the tech stocks under pressure as a result of that negativity around US tech. Here's where we're focused, though. The banking sector very much in focus today here for Europe. Santander, the Spanish bank, weighing on the overall Spanish market. This stock down by more than 3% this morning. I spoke to the CFO earlier. He was talking quite positively, actually, about the UK housing market. That's a big area of business for Santander right now. But in terms of the overall company, there are concerns around costs. And so that seemed to dominate thinking, according to analysts, despite the fact that obviously net interest margins have been rising for many of these European banks. That's been the focus for UniCredit, and the market giving it the benefit of the doubt there. 3.6% higher for that stock. There is that dynamic around net interest margins, which is, of course, important. And the company has guided higher for the period ahead, so that also matters. Heineken is down by 10.5%. The drinks maker then giving an update to the market, which showed that, yes, volumes were rising, but not as much as had been expected by analysts. And costs, once again, costs were an issue in the banking sector. Costs an issue if you're making beer, it seems, no matter which sector, costs very much in focus. Now, it is the second day of Saudi Arabia's Future Investments Initiative, which is taking place in Riyadh. The conference convenes business, finance, and political leaders. Joining us now from the event is Bloomberg's Yusuf Gamel Eldin, who is joined by a guest. Yusuf.
Hey, Anna. Well, I mean, we've said before that there's a huge turnout at this event. Probably about 5,000 people this year. We found refuge from the crowds, be able to sit down with the Minister of Finance, Mohammed Al-Jadaan. Thank you for making some time in what is a very hectic schedule. Saudi Arabia is the fastest growing G20 economy at the moment. There's a lot going for Saudi Arabia. The rest of the world looks pretty bleak. What can you do to mitigate the impact of a potential recession in those other parts of the world?
Thank you, Yusuf. It is indeed interesting times. I think the world is facing a lot of challenges, but the world also needs predictability, the world needs stability, and the world needs cooperation. And I can tell you, in Saudi Arabia, we have been planning for years, executing with really dynamic execution program, and we are seeing the results. The results are very positive. Unemployment, the lowest in 20 years. Private sector is really booming. Investment is up, I think, about 16% compared to last year. Consumption is very strong. What you need is a plan, focus on execution, and then you need to deal with crisis. You need to make sure that you mitigate early, you are ahead of the curve, you take steps, as we have done over the last couple of years, to ensure that we are protected from these shocks.
In terms of 2023, the IMF thinks you can pull in, 3.6% in terms of GDP growth. I'm wondering whether that matches up with your thinking at the moment from what you're seeing in the data.
I think what we focus on is not the total GDP. In Saudi Arabia, we have the oil GDP and non-oil GDP. Vision 2030 focuses on non-oil GDP, and non-oil GDP this year is growing at 5.9. We believe that next year and the next few years are going to grow with similar number, 5 and north of 5%.
What about interest rates? Those are going up. Liquidity is being drained from different parts of the world. I look at the SIBOR, which is the Saudi interbank rate. Those are at record highs for the 6 month. The spread to LIBOR has gone wider as well. What are you doing to alleviate, some of the liquidity crunch in the system?
I think there is a lot of liquidity coming into the system. There is a lot of liquidity coming from the government. There is a lot of liquidity coming from investment. And obviously we have a very strong central bank that is able to deal with liquidity. I don't think we have really an issue. We have a very strong banking system. And we are providing a lot of support to the private sector. Part of Vision 2030 is to enable the private sector, and we wanted to see the private sector grow. We are seeing that in investment. Look at the market. The market is up when a lot of markets around the world are down year to date. Saudi market is up. So there is a lot of things going on for Saudi and for the Saudi economy, and we will continue to support the private sector growth.
Inflation has been under control. I mean, that's a good thing so far. But at the same time, it could go up a little bit in the new year in 2023. What measures are you looking at to take out some of the heat and cost pressures for consumers? Are you looking at maybe revisiting VAT?
What we have done, I mean, looking just in the past 24 months, we have done a lot of steps to anticipate this. And we saw what is happening now almost a year before. And we decided to put a ceiling to the energy prices locally so that the economy is not impacted by increase in the energy prices. We have provided support to low-income households, and we really done a great job in making sure that we have a contingency plan when it comes to food. So we stocked more, we built more strategic reserves. We are continuing to do the same. As long as you are ahead of the curve and plan well and execute really dynamically, you will get the results that we are getting. The inflation is below 3%. We don't think it will go even higher than that next year.
One of the things that's being talked about a lot, I mean, from what I've been seeing here, is U.S.-Saudi tensions. Now we are waiting for what the U.S. considers a retaliatory move, because what they're seeing is that the Saudis have taken an aggressive step forward with the decision. You know, of course, you can take the other side of that argument, but for the U.S., it's retaliatory. What would you do if an OPEC bill got passed, or is that something you're not even considering at this point?
Let me tell you, I think without speculating what the U.S. is going to do, U.S.-Saudi relationship has been very strong for the last 7-8 decades. And we weathered a lot of circumstances and situations in the past that are very difficult. I think there are a lot of strategic partnerships and relationships and interests between the two countries. We are taking steps to make sure that we stabilize the energy market, and we'll continue to do so. I mean, we have been tested for years and decades and when it comes to energy markets. But we are also focusing in our non-oil sectors, and we wanted to make sure that these are predictable, provide stability, create jobs, investment opportunities, and you are seeing it here in this event. FII is the most successful year so far. Investors are believing in the country, they see the results, and we'll continue to push on. I will not really be distracted by the noise.
Closing question on Saudi Aramco. You're on the board of the company. They're pulling in record profits. Is there any visibility on an increase of dividends?
I mean, that is for Aramco board, and Aramco also has a lot of plans to invest. They are investing in their capacity. They are investing in distribution lines. They are investing in gas. They are investing in downstream. I will not speculate what the board is going to decide in terms of dividends, but it's at the end of the day, we'll have to wait and see what will happen early next year.
Minister, it's always a pleasure. We've been doing this for a very long time together. I think probably close to 10 years. So thank you for making time again. That's the Minister of Finance, Mohammed Al-Jadaan. Anna, back to you.
Yusuf, thanks very much. Bloomberg's Yusuf Gamal El-Din and Mohammed Al-Jadaan there, the Saudi Arabian finance minister. Really interesting conversation about US-Saudi relationships, crucial as they are in the oil sector. We continue to watch that carefully. Coming up on this program, we'll get back to the tech sector. Big tech takes a big hit. The likes of Google, Microsoft and Texas Instruments falling in pre-market trading after posting disappointing earnings. More on that sector next. This is Bloomberg.
Nutrigenomics and precision nutrition is one of those rare scientific fields that overlaps with the Instagram-friendly wellness industry.
There is a lot of interest in this idea of personalized nutrition, and especially how accessible it is to the public. You can go on Google and type personalized nutrition or diet and genes, and you will find dozens of different companies that offer this nutrition precision tests.
One of those companies is Routine. Routine claims that their personalized tests stemming from sciences like nutrigenomics make their supplements different. But even with the claims from Routine, as well as dozens of other personalized nutrition companies, the science still has a long way to go.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Kriti Gupta in New York and Anna Edwards in London. Matt Miller is off today. Well, U.S. tech stocks are down this morning and taking the broader market down with them after disappointing earnings from some big names. Microsoft posted its weakest quarterly revenue growth in 5 years, while Alphabet's revenue fell short of expectations. Each of those stocks down around 6% in pre-market trading, while Meta and Twitter are on deck to report today. Joining us now for more is Matt Bloxham of Bloomberg Intelligence. So, Matt, let's just start with Alphabet. If Google can't hang in there, what does that mean for everybody else in this environment?
Yeah, I mean, it's definitely a kind of fairly significant warning about, the direction of travel for advertising budgets across big corporates. I think we've seen some similar surveys recently too, pointing to slower spend next year. There are definitely some nuances there, and also got some of the advertising agencies reporting today too, WPP. And I think, the likes of Google are definitely suffering from the downturn in, for example, crypto advertising spend. But I think definitely across the board pressure on ad budgets.
So that's the Alphabet story, and you're sort of broadening it to the ad story more widely. And I know that we've seen that in different advertising agencies around the world. So that was Alphabet. What about Microsoft? We also heard from them overnight.
Yeah, Microsoft, actually, their numbers for the quarter were pretty strong, slightly better than expectations. It was more of what they said about the forward guidance, which was the problem. So Azure, which is their cloud computing business, they were talking about a 5 percentage point slowdown sequentially in growth. Still very strong growth, probably kind of mid 30% year-on-year growth. But I think some sense there that the investment in technology upgrades is starting to slow, and some of that revenue is usage-based, and that as corporates see lower activity from their customers, that will translate into lower spending with Microsoft on cloud. So still good growth, but just not as good as people were hoping for.
Okay, so still a focus on cloud. And what do we know about the strength of the dollar and how that's impacting these businesses then, Matt? Because this was something we talked about last earnings season, and it hasn't got much better.
No, in fact, it's got a bit worse. So I think it was about 5 percentage points of growth headwind for both Microsoft and Google this quarter, and it's about 3 percentage points last quarter. So I think obviously until we lap those pressures next year, it's going to be a problem, unless of course the US dollar strength reverses, which seems unlikely for now. So yeah, it's definitely a problem for those US listed companies.
Well, Matt, what is the next leg of growth then? And when we're talking about cloud, which has really become this fast and furious transition, not just for Microsoft, but for Alphabet as well in their cloud business, and I dare to say even Amazon Web Services, if you start to see this pullback in business investment, what's the next leg of growth for a lot of these big tech companies?
Well, it's a good question, and I think that the next leg of growth is essentially competing more directly with each other. Also, we've seen Apple push more aggressively into advertising. Amazon's doing the same thing. So I think it's more each other looking at their respective dominant businesses and trying to push for a share of that pie.
How much can be blamed on Apple, Matt?
It's definitely a significant factor. I think it's been more of a factor for Facebook and Meta, and obviously they report later today. They've borne the brunt of those changes to ad tracking. A little bit of an impact there for Google, but I think, certainly for Google overnight, it's more about the kind of broader economic slowdown and perhaps some of the structural pressures we're seeing from TikTok coming in as a quick grower in the digital ad space.
And Matt, finally, in the ad space, Twitter would have some sensitivity there as well, but that doesn't really seem to matter right now. All that matters is whether or not Elon Musk does indeed close the deal on Friday, as he says he will. Given the kind of environment we're talking about, assuming he succeeds in taking the company private, what do you think happens next? How does that business need to be altered and run in an environment competitively and economically like this?
Yeah, it's a good question, and I think obviously we've already heard some hints that he's maybe thinking about some significant headcount cuts, so kind of trimming the cost base substantially. He's obviously historically also talked about some kind of subscription model for that business too. So I think, yeah, particularly in light of a weaker ad environment, I think there's always been issues about whether Twitter's really properly monetizing its franchise in the ad space. You know, I think a subscription model may well be something that we see under Elon Musk.
Okay, Matt, thanks very much. Matt Bloxham of Bloomberg Intelligence, thanks for bringing us up to date with all the themes from tech. And coming up later today, an interview with the DoorDash CEO. That is going to be right here at 5 p.m. in New York, 5 p.m. New York time, 10 p.m. in London. This is Bloomberg.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kaylee Lyons and Chrissy Gupta in New York. Matt Miller is off today. Now, Treasuries are extending gains from yesterday's close alongside the US dollar declining to its lowest level in 3 weeks. Our markets reporter Valerie Teitel takes us through the dollar's recent descent and what it all means. Valerie, good morning. Is this just some position clearing out, or do we get excited that we might once again be talking about the pivot word, P?
Yeah, and I think traders were really caught off guard by the dollar's move weaker today. There was really a lack of a clear catalyst. I've got a chart here of the last 4 days of the dollar's descent. Friday, we had the BOJ intervention and the Wall Street Journal article clamoring that the Fed might step down to 50 in December. And then 2 days ago, then yesterday, we had the weak U.S. house price data. So the fall to overnight today basically mirrors the move we've had, and there was no clear catalyst, which shows that maybe this was a positioning clear out. Maybe this pivot narrative is gaining steam. And I'm going to show you one more chart, which maybe is something we should be a bit concerned about. It is the correlation of the Bloomberg Government Bond Index to the S&P. And my thesis here is that government bonds are beginning to trade like risk assets. And as this pivot narrative either picks up or falls away, whichever way we're headed, government bonds and equities tend to move in the same direction. Risk tends to rally at the same time bond prices increase. Now the one thing that is shocking about all of this is when this correlation breaks down, that is the scary scenario. What if we have a situation where the Fed pivot comes, but then the inflation fight, it hadn't finished its inflation fight first? Meaning we have a big equity risk bounce at the same time bonds fall because inflation is entrenched. So yes, we look at this and say the recent correlation is shocking, it's high, we've never seen anything like this. But to me, the real risk is when this new correlation breaks down.
Yeah, it's a question of really if a Fed pivot is going to be bullish, if it's happening because something is breaking. Bloomberg's Valerie Teitel, thank you so much as always. And of course, you can see both of her great charts at GTV Go on the Bloomberg terminal. Finally, let's take a quick look at what else is ahead today. Tech earnings will continue with Twitter and Meta reporting sentiment not great going into those prints after the disappointing results from Microsoft and Alphabet yesterday. Then it's UK Prime Minister Rishi Sunak's first Prime Minister's Questions. That's at 7 a.m. New York time. U.S. President Joe Biden will be holding a bilateral meeting with the Israeli President Isaac Herzog later today. And on the economic front, we'll get U.S. new home sales at 10 a.m. Eastern. That will be interesting after the housing data yesterday. That really was a catalyst for the bid we saw into the Treasury market. And finally, and most importantly, it is Anna's birthday today. So Anna, a very happy birthday to you from the entire Early Edition team.
Thank you. Well, I obviously know how to spend my time, don't I? What I got for my birthday is a stronger pound and some bank earnings to talk about, which is, of course, a thrill. Chrissy, interesting for markets to watch, though, what's going on in the UK politics space. I'm moving on. The UK medium-term fiscal plan, it seems, is going to, according to the BBC, now we've got another report here. So we had the Times newspaper and now the BBC saying that this fiscal plan will be delayed from the 31st of October to November 17th. And Chrissy, what's important there is that takes it beyond the Bank of England meeting, which is due on November the 3rd.
And I think what's also interesting here is at the same time, I believe we're also getting headlines that there is some suspicion that whatever plan that Rishi Sunak is able to introduce will actually be smiled upon from the IMF, which just weeks ago said it was very concerned about the UK.
Yeah, absolutely. So we'll continue to watch that carefully. And Kaylee, I know we'll be watching US data. Really fascinating to see the way that the market is dealing with weakness in US data, changing expectations just at the margin around what the Fed might do, as if sort of testing the waters around that narrative.
Yeah, and you're definitely seeing that showing up in the bond market after a 14 basis point move lower on the 10-year yield yesterday. We're down another 4 basis points or so today. What's interesting is that even though bond yields are moving lower, it's not helping out equities because NASDAQ 100 futures still sharply down after those weak earnings. So we'll look to see whether that story continues with the reports after the bell, Anna.
Yeah, the big tech effect there. That is it for Early Edition. Surveillance is ahead. They'll be speaking to Mike Wilson, Chief U.S. Equity Strategist at Morgan Stanley. What significance does he attach to the weakness of the data? What does that mean for the Fed? We'll get his thoughts shortly. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The volatility, the fear, the capitulation has really not been there yet.
We do have a recession penciled in. I suspect it may not be as bad as some of the more extreme forecasts that are out there.
Have the markets seen their bottom? We're all talking about the risk of recession, but markets still, to me, don't have it priced in.
I think it's very hard to see something that's going to be smooth landing in any way.
The financial strains are going to become more severe because right now the Fed is on the way to go from 3 towards 5%.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. TK's back tomorrow. Equity futures in focus, negative on the S&P 500. Bramo, 3 days of gains on the S&P, colliding with some negative news after the close yesterday.
Yeah, is bad news really good news? Because that seems to be what the narrative shift had been. Basically, we saw cooling data in the housing market, and suddenly in the tech space, bad news was bad news, right? And so at what point does that narrative start to take some steam out of this feeling that a Fed pivot is enough to really move the needle with respect to where the stock valuations are?
Three concerns: ad spending at Google, IT budgets over at Microsoft. Then you've got to say, industry, for Texas Instruments to come out, which is a pretty broad chip maker, right? It goes beyond just, say, smartphones and computers. Those three concerns put together, are we starting to see the pain come through?
Well, and that's really the issue here. It was broad-based, right? Even Microsoft, the CFO came out and said that they expect $800 million of extra charges for energy expenses in Europe and beyond. So how much are you starting to see the global pressures really take aim at some of the behemoths and the cash cows of this corporate world? At what point, though, is this enough to undermine what people are hoping is more than a bear market rally?
We get Facebook numbers a little bit later. Equity futures on the NASDAQ down as well. There's a rally in the bond market on treasuries. Yields lower by 4 basis points on a 10-year. I can tell you in the FX market, tons of dollar weakness, and we can talk about that in a moment. But something stands out on my screen for me right now. A rally in treasuries, a sell-off in gilts. At the front end on a 2-year right now, in a gilt market, up 11 basis points. Reporting from the BBC just moments ago that this medium-term fiscal plan is going to be delayed until November 17th. We're going to get a full autumn statement from the British government. The problem here is the sequencing now. Because the Bank of England makes a decision on November 3rd. There was some hopes in this market, I think, that we'd get the fiscal plan first, then you'd get a Bank of England decision after that.
So basically, is this the market saying that this will force the Bank of England to move much faster because they don't have a sense of any kind of fiscal constraint on the budgetary stance, that in the case of uncertainty, they need to go hard at inflation, and that might be unwarranted based on whatever the fiscal plan is later?
That's the assumption. Right now, at least. I think it makes it very, very problematic for Governor Bailey going into their meeting next week. And I will say, given how quickly this market has moved, November 17th feels like a very, very long time away.
It's
that
ridiculous.
Feels like a lifetime.
Honestly, this year has been. I'm going to protest. It's been too long.
Would you like to take the rest of the year off?
Yes, I would.
That's
I would
what
like to
tea
see yours too.
tasting, you know.
Well, yeah, no, I would like it to just move a little faster and not be as volatile, and then we can all just kind of like
I thought this is what you've been talking
No,
about for
I
like
know
10
it's
years.
great.
You get
No,
it, and now
honestly,
you don't want to see it.
It's fascinating,
Okay.
but it's like, what is it? What did Lisa Shallot say? A roller coaster to nowhere.
Yes.
That's kind of what it feels like sometimes.
Well, let's talk about that roller coaster to nowhere right now and look at the equity market on the S&P 500 negative. We're down by about 8 or 9% on the S&P. I talked about that rally in the bond market. For treasuries, at least, yields lower by 3 or 4 basis points, just north of 4% on a 10-year. I also talked about that dollar weakness out there. Euro dollar reclaiming parity, just above parity right now. Bramo, euro dollar advancing about 0.6%.
It's amazing. That's notable. It's, oh my goodness, the euro is so strong at parity. Can you imagine? I mean, 6 months ago that we were talking about this. Sticking in the European region, UK Prime Minister Rishi Sunak is going to be taking his first PMQs at around 7 a.m. What you were talking about is really important. Why are they delaying this fiscal plan to November 17th? Is it because they need to craft it? Have they not already crafted something? Is it because they want to get the details laid down, or is it because they want to give the Bank of England the room to hike more? I'm curious about what the questioning will be like in that venue. 10 a.m., the Bank of Canada rate decision. Is there a step down? How much does this really confirm this feeling that we've kind of priced in peak hawkishness by central banks? Canada has been very much a front runner when it comes to setting the tone there. We see two-year yields still, though, at the highest levels going back decades right now at 4.2% more or less. And after the bell, Meta earnings come out. Facebook, I'm not going to do this. And I could hear Tom's voice in my head being like, who calls it Meta? Why are you letting them get away with that? Facebook. But this really follows what you were talking about with Google and with Microsoft. And I am curious about how much Meta is going to confirm this advertising slowdown. I stuck Twitter in there too, because evidently the deal's getting done. And I thought that was pretty interesting.
Yeah, I wonder how the banks feel about that.
I resigned.
Yeah.
That's, I mean, because it's going to be about a $500 million charge-off for them. And it seems like they're not pushing back.
If they realize the losses, you imagine they're just going to sit on this for a long, long time?
Elon Musk has to participate in selling it. Did you see
that? I saw that for a couple of hours.
For a couple of 2 hours.
2 hours, that's
for 30
part of the
days.
deal.
Yeah, for 30 days after it closes.
Okay, we'll see how this turns
exactly.
out. Joining us now is Russ Kostrick, Portfolio Manager for the BlackRock Global Allocation Fund. Russ, fantastic to catch up with you, sir. A couple of days of this now. We've had some bad news, and treasuries are rallying. Can you walk me through what you're understanding from the data and what you're learning from the way the market's responding to it?
Good morning, John. I think what you're starting to see are a couple of things. I mean, one, you have had soft economic data. Yesterday was another example. Confidence, Richmond Fed. The economy is slowing, which is obviously what the Fed wanted. I think you're also getting to a point where you're starting to have a narrative congeal around the Fed getting close to 5% and then pausing. And I think that is providing a little bit of relief for interest rates, a little bit of relief for the bond market. Doesn't mean rates won't go higher, but there is a little bit of light at the end of the tunnel about how this plays out over the next 3 to 6 months. I think that is helping the bond market get its footing, at least temporarily.
Are you buying into this?
So, Lisa, we've really been focusing on one thing for the last few months. We've been focused on the short end of the curve. And there are a few reasons for that. First of all, that's where you probably have done the most work in terms of discounting where the Fed is going to wind up. Second, if you combine the short-term rates with spreads, for example, buying short-term IG, you're actually getting a pretty healthy yield right now. You're getting 5-6%. And in an environment where equities are likely to chop around for a while, there's still a lot of hard-to-quantify risk. If we can get good carry in the front end of the curve, we can help the overall income on the portfolio. To us, that's a sensible thing to do in this market.
Meanwhile, you said over the equity markets, if they're going to be sort of just choppy and the roller coaster to nowhere, I really don't understand whether or not we're pricing in recession. You have some coming out and saying yes, including Citigroup, Goldman Sachs saying no. What's your view, especially given that any misses of earnings or even matches are really not really treated with particular success in the aftermath?
I think there's an argument you're starting to price in a mild recession, but you're certainly not pricing in something severe. And this is where I do think it's tricky for the stock market. And you've had an entire year now, or close to a year, of multiple compressions. And yes, valuations could go a bit lower. We traded lower back in late 2018, but probably most of that adjustment's already occurred. But the problem is, as you know, is that we still don't know about the earnings side. And this is where it does get tricky because this recession might look different in the sense that inflation may very well be higher. The reason that's important is it means that nominal GDP is going to be higher. Now, here's the good bit of news. It would be rare to see a big collapse in earnings in an environment in which nominal GDP, in other words, real growth plus inflation, is still positive. So if you take the view that, maybe there's 1 or 2% contraction early next year, and inflation is still running at 3%, that's an environment where earnings probably don't collapse. However, if we start to see a more severe downturn in the economy, then yes, I don't think stocks have priced that in, and that's where you probably have some more downside for equities.
Russ, just getting confirmation of a report I shared a couple of minutes ago from the British government, the government delaying the fiscal statement to November 17th. We understand that statement's going to be accompanied by a full forecast from the Office of Budget Responsibility, the independent forecaster that's dominated budgets for much of the last decade or so. Mohamed El-Erian out on Twitter a little bit earlier this morning, anticipating this event, said this would provide more time to design the measures and consult. It would also be risky, complicating the Bank of England's task and possibly reawakening the bond vigilantes. Russ, I'd love your view on this on a morning where gilts are selling off and treasuries are rallying and yields are higher at the front end of the UK. What do you think all this means?
Well, I think the bond vigilantes are back. Again, we've seen that certainly in the last few months in the UK, and it's a very different environment. And again, I think this goes to a broader point. When you had this broad macro stability, when inflation was low and stable, you can afford to be a little complacent. In this environment, investors are going to start to pay more attention to the fiscal situation. They're certainly going to start to think about, if you have a country where you have to worry about funding, what do those funding needs look like? And it's been a long time since we've had those issues in developed markets. The U.S. still benefits from the fact that you have the reserve currency. This is the safe haven asset for a number of investors. So we haven't always had that same level of scrutiny in terms of our fiscal stance.
Russ, do you think we might?
That's a good question, John. I've been waiting for that for a long time. It still doesn't seem to be what's driving markets day to day. You've had some pretty aggressive fiscal action over the last few years. And yes, rates have backed up, but I think as we all know, they backed up because of the unexpected inflation. Whether or not we get to a point where investors really start to pay attention to the U.S. fiscal position, I don't think that's the main driver of the bond market yet. I still think we're living day to day on inflation numbers, on the economic numbers, and every utterance out of the Fed.
Yeah, I keep saying it. We're at the mercy of the next CPI print stateside. Russ, thank you, buddy. As always, Russ Kostrick there of BlackRock. If you're just tuning in, some confirmation from the British government, the UK government will delay that fiscal statement to November 17th. On November 17th, it will be accompanied by a full forecast from the Office of Budget Responsibility. Complicates the sequencing here. We did think this could take place at the end of the month. That was previous guidance. That would take place, of course, before the next Bank of England meeting, which is next week on November 3rd. So, Bramo, it's over to you, Governor Bailey, I guess, in the next sequence of all of this. And in PMQs in the next 50 minutes or so, I think the PM, the Prime Minister, has an opportunity to walk us through just why it's being delayed and explain to us what we can expect in about a month.
Right, and explain why it's important to come up with some sort of estimate about what this does to the budget that's comprehensive and the last statement on that rather than have something half-baked. But he's got to signal more than that.
I can tell you the gilt market's selling off this morning, but relative to the moves we've seen in the last month, these aren't major moves, are they? Up about 11 or 12 basis points to the front end in the UK. Live from New York this morning, good morning. We'll talk about a tech earnings still to come. Facebook coming up after the close. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Bloomberg's learned that Elon Musk is promising to close the acquisition of Twitter by Friday. Musk made the pledge in a video conference call with bankers helping fund the deal. They're providing $13 billion in debt financing. Last month's pickup in Chinese business activity wasn't enough to change the country's grim economic picture. The economy slowed in October as car and real estate sales weakened. Meanwhile, China's global trade and small business confidence contracted. All of this according to Bloomberg's aggregate index of 8 early indicators. The European Union's executive arm will lay out plans to drastically cut pollution levels across the bloc today. That could potentially eliminate more than 70% of the 300,000 premature deaths annually over the next decade. Overhauling air pollution will bring the EU closer to guidelines laid out by the World Health Organization.
And Deutsche Bank is signaling that it may exceed its full-year revenue target. The German bank's traders keep taking business from rivals, and rising interest rates fuel income for lending. Deutsche Bank saw fixed income trading jump 38% in the third quarter, beating most of the big U.S. investment banks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
We will never break. We will never break. Build on a foundation strong enough to stay. We will never.
Earnings season season is here.
The earnings are starting to pour
The
in.
numbers are holding up better than expected.
Sorry, business isn't all that bad.
Bloomberg breaks the numbers first.
Netflix earnings going to cross the wire.
A big beat. Stock is up more than 8%. Coming in stronger than their rivals.
With exclusive expert analysis.
Finally back to growth.
The mother of all opportunities.
What is the industry to watch?
That's where the rubber hits the road for Goldman Sachs.
It's going to be a really interesting earnings season.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
I think the UK is the canary in the coal mine for everybody around the world, even for the US, for Janet Yellen, for the Fed. You don't want to do a UK, seems to be the conclusion from talking to foreign policy makers. When it comes to budgetary constraints, don't push it.
You don't want to do a UK. Jordan Rochester there, the G10 FX strategist over at Nomura. Things you never want to have to say, I guess, as a Brit. Futures right now on the S&P, negative 0.75% on the S&P 500. We are lower off the back of weaker than expected earnings after the close yesterday. Yields are lower too on Treasuries, down 3 basis points on a 10-year, just north of 4%, close to 4.1%. I say on Treasuries because they're not on gilts. Your 2-year in the UK is up 11 basis points. Your 10-year up about 5. Further out along the curve, 30s, 40s and 50s, a whole lot softer. And these are off the back of a series of headlines this morning suggesting that the UK government will delay the fiscal statement. They are going to delay that fiscal statement. That new date is November 17th.
And what's the implication here? That basically the Bank of England does not have any space to really pull back from a 100 basis point rate hike or something more aggressive in the face of inflation, and that is going to bleed into this whole rate structure higher. It's unclear why they're doing this, as you pointed out rightly, John. Why not come out with some framework, some bones, and say, here, this is what it is. You're going to hear more details and an OBR assessment on November 17th.
I think the Chancellor's trying to do that right now. So let's get over to Lizzie Burden at Westminster. Lizzie, the Chancellor speaking just moments ago. Walk us through what he had to say.
Well, he's trying to reassure us after Mohamed El-Erian has said that this delay could reawaken the bond vigilantes. Hunt says that there will be a full forecast from the Office for Budget Responsibility. He's spoken to the BOE Governor Andrew Bailey. The priority is restoring economic stability. Debt will be falling in the medium term. They are willing to make politically embarrassing choices. This is what we've heard so far from the Chancellor, Jeremy Hunt. He's kept his job. Ultimately, he wanted to press ahead with the original Halloween date. But what we've heard behind the scenes is that Rishi Sunak wanted the delay because, of course, this is premiership defining. In answer to your question, why did Sunak want to delay? He used to be the Chancellor, remember. He's going to want to delve right into these books. And as Hunt has put it, these are eye-wateringly difficult decisions that need to be made. Although former BOE and OBR official Charlie Bean has said that he expects the fiscal black hole may have shrunk from £40 billion before to now just 30. Still, they're going to want to look closely at which levers they're pulling.
Lizzie, November 17th feels like a lifetime away. Let's get to November 3rd, first of all. That's when Governor Bailey has to make a decision at the MPC with the Bank of England. Can you walk us through what that decision is going to look like now?
Well, you have to take into account that we're now into double-digit inflation, back where we were in July. But given that we're not in the space of trustonomics, investors had pared back their bets from 100 to 75 basis points. I think you'll probably see you've still got the hawks on the committee who are worried about this getting out of control, and it wouldn't have taken at the last decision many more to join them, to push them towards a bigger hike. Will they want to front load? Will they have less of a need to do that now, given that we seem to have someone who is desperate to reassure us that they've got their hand on the tiller, that they can calm the markets. That is the ultimate message that Jeremy Hunt is making here, that they will balance the books in the medium term. You have to wonder, will the BOE be reassured by this message from Jeremy Hunt?
Over in the United States, Lizzie, there's starting to become some pushback against the Federal Reserve and how quickly they're raising rates. Is there a similar feeling in the United Kingdom right now? And on the margins, politicians coming out and accusing the Bank of England of moving too quickly given the deteriorating growth prospects. Is that something that's in the zeitgeist?
what a swing of the pendulum that would be. After the whole summer, Andrew Bailey took flack for not acting fast enough on inflation, the BOE even being threatened with mandate review, although that seemed to drop by the wayside as soon as Truss got into office. There may be criticism, of course, because this is hurting ordinary Britons, and one of the big criticisms of Rishi Sunak is that he's so personally wealthy he can't understand the plight of ordinary Britons in the cost of living crisis, and then to have the Bank of England making it even harder with a massive rate hike. I'm sure that there are many people who don't want that, but you've seen mortgage costs coming down because markets have been reassured by Rishi Sunak taking over. So I'm sure that many people have their views on the Bank of England, but at the moment it seems like they are leaning towards 75 basis points.
Is Rishi Sunak starting his reign with popular support that is sufficient? Should there be some sort of general election in 2 years?
Look, he's got a huge mountain to climb here. All the latest polling shows that I think 2/3 of people in a YouGov poll said that they thought he was out of touch. He's really going to have to make an effort to convince people that he's genuinely empathetic to their cause. He said a lot in front of Downing Street yesterday about how he's fixing the mistakes of his two predecessors, and yet if you look at his selection for cabinet, he's reappointed the biggest names of Truss's cabinet, the three great officers of state, Cleverly, Hunt, Braverman, back. And Braverman, of course, the Home Secretary, supported this policy of shipping asylum seekers off to Rwanda. Does that look like the compassion that Rishi Sunak was promising? I'm sure that this is the question that Labour's the opposition leader, Keir Starmer, is going to be asking at Prime Minister's questions today. Braverman there, seemingly, because Sunak's had to do a deal with the Tory right in order to get into office, a complaint that the Deputy Labour leader, Angela Rayner, has been making. There's hope that this is the new era of boring versus boring and a calmer time, but getting into office is probably the easiest bit for Rishi Sunak.
I think we'd all like it to get boring and quickly in the UK. Lizzie, thank you. Lizzie Burden in Westminster. PMQs in the UK starting in about 35 minutes' time. Lisa, I have to say, in normal times, this is pretty straightforward. You've got a new Prime Minister. He wants to go through things and make sure that the fiscal plan is it, and he's on board with it. So you wait a little while. These aren't normal times. And I think this makes it very complicated for the Bank of England. I don't want to go too far with this, though, because I think there is an opportunity now for the Chancellor and the Prime Minister to really lay out what they plan to do on November 17th. And if those plans don't spook this market too much, maybe you can get back to, dare I say, business as usual.
My issue is, and this is where I'd push back just a little bit, if they pulled another Liz Truss and came out with some sort of plan that did not actually become feasible on some sort of economic level that they had to walk back, that would be so damaging for the United Kingdom yet again. So that's my one pushback that seems like maybe it's in their best interest to wait a little bit longer.
The gilt curve's a bit of a mess, I have to say. It's up 9 basis points at the front end, 10 years not doing much. Then at the long end, on a 30-year, we're up 10 basis points as well. This market's been a bit of a mess over the last month. From New York, this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. Multi-trillion-dollar industry. There's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Today on Bloomberg.
3 days of big gains on the S&P 500 colliding with negative news after the close yesterday. Let's get straight to it. Futures right now on the S&P down 0.7%. Guidance from Microsoft weak. Numbers from Google not great. Meta coming up after the close. The Nasdaq 100 futures down 1.6%. A rally in the Treasury market. The house price growth data yesterday in the United States not great at all. Yields lower, much lower, and lower again this morning by 3 or 4 basis points on a 10-year to just north of 4%. On a 2-year down 3 basis points at 4.44. Bear in mind, we had a look at 460 in Friday's session on a 2-year. We've backed away from those levels in a big way in the last couple of days, including in the session on Friday as well. Want to finish on foreign exchange. What you do see right the way through G10 this morning is a much, much weaker dollar. And even with the concerns in the UK, that pound strength, it sticks. 115.60 and a higher session, Bramo, 116.20 on cable. At the end of September, 103.50. So we've gone from 103.50, which is a generational low in a currency, and now we're back at 115.60.
And some people might say this is very much a Britain story. There is leadership, and Rishi Sunak is thought to be coming out with a more conservative plan of austerity. This also could be very much a dollar story. I mean, there are reports that China is selling its dollar holdings in order to support the UN, that we see that kind of intervention coming from over in Japan. How much is that also a big piece of what's going on more broadly?
This is what the rest of the world wants to see, right?
Yeah.
The Japanese, the Chinese, the Europeans. You'd imagine this is what they want to see.
Well, I mean, this makes it easier for them to not import inflation to such a big degree. At the same time, how sustainable is it if it's just a matter of selling dollars or selling FX reserves and there is no structural change in either the economic outlook or some of the monetary policies of the likes of Croda?
If you'd like the update on the United Kingdom, the sequencing before today looked a little something like this. At the end of October, you were set to get a fiscal statement from the Chancellor and the British government. And then on November 3rd, you would have a Bank of England rate decision. And ultimately, the BOE, the MPC, would be able to sit around a table, they'd have the fiscal plan, and they could make a monetary policy decision. What we understand from this morning is that plan will be delayed. That statement from the fiscal side of things, from the UK government, will now come on November 17th. So when the MPC gets around a table, Lisa, they won't have those plans. I guess they'll have a decent idea of the direction of travel from the British government, because we'll hear from Rishi Sunak, the Prime Minister, in about 30 minutes' time.
Okay, but you raise this, and I think it's a really important point. The market moves now. They're not going to wait until November 17th to move. So how much are they going to adjust their plan depending on where the market is? And if they do see some sort of big move, do they pull that up? Right? I mean, this is the issue when you have a vigilante market. How much do they pressure a Rishi Sunak that's trying to be deliberate and methodical? I'm playing both sides here because I'm not sure the right answer, but it shows a real tricky bind right now that the UK is in.
I'd say relative to the moves we've seen in the bond market, specifically the gilt market over the last month, a move of 7-8 basis points at the front end is not a major move. I mean, we were talking about 50 basis point moves several weeks ago.
Absolutely, I would agree. But what happens if the Bank of England says, okay, we've got to go 100 basis points. We have no idea what they're going to do. We're very concerned about what's going on with inflation. Does that change the equation for then what comes out on November 17th? Do they start to feel pressure? I'm just, right now, you're right. The moves aren't that major because Rishi Sunak seems to be the controlling kind of, status quo and bringing things back on the rails. How long can that last?
For now, at least, Sunak and Hunt seem to have the credibility that Kwarteng and Truss did not have. To your point,
well said.
How long does that stick? I guess we get the first test in PMQs in about 27 minutes' time, and then we'll get the reaction from Lizzie Burden over in Westminster too. Joining us now is Asa Linios, the Global Head of FX Strategy at RBC. Asa, I'd love your reaction to what we're hearing from the British government and ultimately what it means for pound sterling, with cable seeing a higher session of 116.20 this morning.
Sure. So I think, as you said, a lot of this is dollar weakness rather than sterling strength. But on the UK side, some interesting developments, because I think Sunak and Hunt probably right to actually delay that statement, certainly from October 31st. I mean, the tabloid writers would have had a field day with the Halloween headlines. And yes, it makes the Bank of England's decision a lot harder on November 3rd. But I think what Sunak and Hunt are hoping is that if the current momentum continues, you can see global bond yields actually coming down everywhere, that the hole they have to fill on November 17th will actually be smaller rather than larger.
I have no idea, Lisa, why it was ever October 31st. As soon as I saw the headline, it's exactly what I said. Why are they doing this on Halloween?
Oh my gosh, I almost feel like I kind of want it to be October 31st so that we can see those tabloid headlines. I mean, is that really a reason to delay it?
A lot of people talked about the incompetence of the former leader. I always had a problem with that October 31
I think it's great.
timing. I thought it was ridiculous. So we do have a meeting at the MPC, at the Bank of England. A decision will come on November 3rd. Does this complicate things for them, and to what degree?
I mean, I think for this meeting, probably 75 and then a wait and see. Further out the curve, there's quite a lot in the price, and actually we're looking for, say, June 23 Sonia's to rally a little bit, but they don't need to make those decisions right now, and they certainly don't need to give any forward guidance. They'll be very much guided by what comes out on November 17th and the state of the market as they make each and every decision. So yes, they're not in an easy position, but I think their position is a lot easier now than it was a few weeks ago.
Elsa, as you said, this is also very much a dollar weakness story. How sustainable is that dollar weakness?
And that's a critical question, Lisa. I mean, we had on Friday that apparent shift in rhetoric from the Fed right before the blackout. Then over the weekend, developments in China made markets a little bit risk averse on Monday. Now it appears to be turning again. We've seen euro-dollar break some pretty big levels, not just parity, but the downtrend that really started in January. And so if we see a combination of lower yields, slightly higher equities, I think the dollar will be in a little bit of trouble for the next month ahead. Longer term, structurally, like you said, it doesn't change anything fundamentally. But for now, I do think there's a little bit of profit taking and a relief rally for other currencies.
John, Elsa was just saying on Friday we got hints of something different from the Federal Reserve. Is she talking about a particular article in the Wall Street Journal? Is that really what people are hinging this all on?
I don't think you need to read the article in the Wall Street Journal. I think Mary Daly said it for herself over at the San Francisco Fed. I think other Fed presidents have said the same thing. This whole idea about a step down, though, can you have a step down without the CPI confirming a deceleration in inflation in a much bigger way? Now, we can all identify falling prices, and I've heard the pushback, and I'm sure I'm going to get it any minute now on my Bloomberg terminal. Those messages will light up. I get all of that. It's not about what I think the Fed should do, it's what they're going to tell us they will do. And what they're telling us they will do is that they need a convincing, several months maybe worth of core data that tells them that they're on a trajectory back towards a 2% inflation target.
Well, and there's this other question of, let's say the Fed does have a step down, right? And then they keep rates at 4.5% for a prolonged period of time.
Sure.
Elsa, is that going to mean that the dollar is going to be weaker? Or does that mean that it will be stronger because it will be a more persistent higher yield, and it means that the rest of the world isn't catching up necessarily at the same pace?
Right, and that's what I wanted to come on to with, the structural comment, because to your point, Lisa, if they are going to keep rates at 4.5%, and yes, other central banks are hiking, but they're also beginning to slow down, the dollar is going to maintain that yield advantage, and it's going to maintain effectively the status of the highest carry, or one of the highest carry currencies within G10, and even relative to several emerging markets. So, I think you've got to distinguish the kind of short-term tactical repositioning from the longer-term structural moves. And at the moment, we've not yet seen that turnaround in US inflation that will really get the Fed to actually cut rates rather than just pause the hikes.
So bear with me, this isn't exactly a butterfly theory, but how much is the UK getting a reprieve from what Japan and China are doing to try to support their currencies?
I mean, it's often been said that politics is all about timing, and you can't exactly feel sorry for Liz Truss, but you can look at kind of global developments and feel like had she not had such terrible timing, she perhaps might have lasted longer than that letters. I mean, all I'll say is that, yes, there is a bit of a reprieve here for the UK, but certainly they have their work cut out as well. It's not going to be straightforward sailing, especially with the current account as it is at the moment.
Do you remember when everyone got really excited about a step down in rate hikes earlier this month, and it was because the RBA over in Australia didn't go 50, they went 25? Well, we had CPI data out of Australia overnight for the third quarter, and it surprised big time to the upside. So I know this is a lagging indicator of things, and I'm sure the RBA has got a lot of tightening in the pipeline, but is that a warning shot to this Federal Reserve?
In part, but I think also what will be interesting is to see how the Bank of Canada reacts today. If you recall, the Bank of Canada hiked in March, just a couple of weeks ahead of the Fed. And at the time, they were very much seen as, leading things. The RBA was still very much stuck in its forward guidance. So let's see what the Bank of Canada do today. A very finely balanced decision between 75 and 50. I think a lot of people will be looking at that as a sign, perhaps, of things to come.
Asa, wonderful to hear from you, as always. Asa Lindros there of RBC. Thank you very much on the situation with the Fed and beyond, including the UK. The headlines from the Chancellor in the last 50 minutes or so. We're willing to make politically embarrassing choices. Many changes affect our forecast, even in the last 24 hours. The accuracy in the forecast is, quote, very important. On the sequencing, and I think the sequencing is problematic for many of you, I'm sure, would have made much more sense to have the fiscal plan than the monetary policy decision. We're not going to get that. The Chancellor said he discussed the new timetable, Lisa, with the Bank of England governor. So he's had that conversation with Governor Bailey, and it's over to you, Governor Bailey, now. Next week, November 3rd.
So how does he handle this, right? Especially given that inflation is still considerable and that there is going to be some sort of likelihood of an austerity kind of plan. Do they raise by 100 basis points and kind of come out with shock and awe? I keep going back to the fact that Bank of England is underwhelmed with respect to rate hikes again
Without
and
a
again.
doubt.
So how much do they need to regain a sense of credibility on that side to say, look, we see that inflation is the foremost problem. We're not going to get involved in political games. This is our view.
I'd love to know what they're going to do with QT and for how long. I keep bringing this up, and I think we can do it again. The ECB had to come up with its own little mechanism, which hasn't been activated yet.
TPT?
To deal with spreads. TPI. The Transmission Protection Instrument, whatever that is. The BOJ's had to intervene in the FX market. The Bank of England's had to intervene in the gilt market. And the Federal Reserve's doing QT. Thus, many, many people, do you think QT is going to make it to 2023? We've had the financial stability concerns in the likes of the UK. We've had them in Europe before they even got going. We've had Japan had to step back in. The reason I ask this is because we caught up with Mohamed Al-Erian yesterday, and he said if this Fed backs away, it's going to be for financial stability reasons, and that's not great. And if they have to do it because of financial stability reasons, he thinks they get stuck in a quagmire of stagflation. That's a big, big problem. And my issue I have with a lot of people at the moment is they come on the program and they say the pivot, the pause, the step down, it's really, really, really bullish. Okay, it might be in the short term, but it's not if it's for the wrong reasons. And that's what I think Mohamed Al-Erian and others are trying to say.
And this is what we heard from Jean Boivin yesterday, right?
Sure.
He was saying it's not clear, and 10-year treasuries aren't necessarily a screaming buy here because of just that fear, which is very much on people's minds.
Futures on the S&P right now down 0.7%. More tech earnings still to come. We'll catch up with Ashok Bhatia, the Deputy CIO of Fixed Income over at Neuberger Berman. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. New British Prime Minister Rishi Sunak has delayed an economic plan that was due to be delivered on Monday. It will now be released on November 17th. According to Sunak's office, he wants more time to make the, quote, right decisions on managing the British economy.
Our number one priority is economic stability and restoring confidence that the United Kingdom is a country that pays its way.
The government wants to close a fiscal gap that could be as much as $46 billion. Europe is running out of time to act on natural gas before winter. The bloc still can't agree on what a price cap should mean. Policymakers have gotten a break. There's a surplus of gas in Europe, thanks in part to warm weather, but that's caused a sense of urgency to fade. New York's still the most expensive rental market in the U.S., but Boston has now passed San Francisco for second place on the list. According to rental listing company Zumper, the median one-bedroom rent in New York now $3,860. Boston rose almost 6% this month to $3,060, while San Francisco is $40 less. Google parent Alphabet appears to be preparing for tough times as the economy slows. The company reported earnings and revenue that missed expectations. Advertising sales also were less than expected. Later, Alphabet said it would slow hiring and control expenses. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.